Very good morning. It's Monday, the 12th of May. We have a trade deal about to be announced live on air. And I've got Pete Ward with me.
Morning, Rich. How are we doing?
What a great start to the week.
Yeah, no, brilliant. Well, we'll see. But general optimism is there.
The general optimism's there. And this is going to be fascinating because Besant's still in Switzerland. Then it looks like we're going to get an announcement in about 30 minutes' time. And that's going to be a real interesting one.
Yeah.
But shall we have a look at what's coming up on today's show, sir?
Sure. Let's look.
Right, so first of all, we got Pete Ward here through to about 8:15. I'm going to substitute Chris Beecham in at 8:20 because he's going to sit outside, have a look at all the details while we're in here rabbiting on. Yeah. So Beachy's going to come in and talk about the trade deal there at 8:20. Then we got Matt Arbour in at 8:30. Now, who else is coming up on today's show? Well, it's a good one. We got Martin Harris coming in as well to chat to Ange. And then, of course, Axel's Trade of the Week. He's going to have to be quick on the old Trade of the Week with the way things are going, isn't he?
Sure is, yeah.
Well, before we have a look at the futures, how are you, Pete Ward?
I'm good.
Long time no see.
Yeah.
Last time was about 9 p.m. on the
it's a long old day, but it was good. Good fun.
So for those of you that weren't tuned in on Friday, Pete and I made our way up to Chester Racecourse on the 9 a.m. train.
Yeah.
It was great, wasn't it? 2-hour journey.
Yeah, it was perfect. Yeah. Back home for 10.
I must say, I'm a big racing fan. I love Cheltenham. Ascot, it's fun. It's a fun way to spend June. But this was a cracker.
Yeah. I mean, we were lucky. The weather was outrageously good, wasn't it? But it did feel good. It was just like 20,000 people, a bit less hectic than the other ones.
Did you count them, did you?
Well, I was speaking to the guy who's the chairman there, and he was saying that they'd have a big uptick in sales. So yeah, he told me
Is he going to be watching this morning?
Unknown. Maybe. I think so.
Can we talk about his horse tips?
He did email me, actually.
So,
two shockers.
Not only were Pete and I absolutely rubbish at picking horses while we were there, but we also had a crack at one on the train on the way home.
Yeah.
In the 805.
Why wouldn't you trade the 805 at Ripon?
805 at Ripon. And this thing was 25 to 1.
Yeah. Came fourth, to be fair.
Oh, did it?
Yeah. We were expecting a place, and it came fourth, and they only paid out top one 3.
I bet fair I could have gone top.
No one was giving 4 on that.
Oh yeah, there was only about 6 in the race, wasn't there? So we thought that was going to be the saving grace. We thought it
was the Hail Mary, wasn't it?
It was the Hail Mary, indeed. Right, good morning to you. How was your weekend out there? Beautiful weather. We've got Kate Murphy on the chat now. Kate, update us. Where are you in the world right now? You've been in Bali. I think you're in New Zealand at the moment. Jesse 14 alluding to something that we will bring on. China has given away a few hints as to what we're about to hear announced at 8 a.m. And I must say, I'm not overly impressed. I think the market might have got ahead of itself here. But we'll certainly find that out in about 26 minutes.
You could say that for the last 2 weeks, to be fair.
Yeah. I mean, what was priced in already?
Yeah.
You know, it was
outrageous optimism in stocks, considering what happened only a month ago. But yeah, I mean, some stocks are now in like overbought territory, which is crazy, really, to think where we've come up. But Friday, I think the DAX went and exceeded levels pre the drop in April. Whereas the S&P, I think, still has 7% to go.
To get to all-time highs.
Yeah, so we're seeing still more favour coming into European indices, European names. Obviously, UK, US trade deal last week. Got kind of rubber stamped.
But we must be flat in the year now, aren't we? S&P, roughly?
Roughly,
yeah. Within touch distance anyway. Let's, well, I'll tell you what, let's go into overnight action, and then we'll have a look at the futures. I don't know who Boyce he's talking to. He says, do they not sell sun cream at the races?
Me? I think he's talking to you, pal.
Possibly. Good morning, Steve Davies. Good morning, Avi Fine. What a great name. Saying, yeah, if only you could sell puts on horses.
Yeah.
That's true. We didn't lay anything, did we?
No.
No, shocker. Should have laid all our bets, literally. Good morning away from the numbers. Kate Murphy in Auckland, New Zealand, 6:30 p.m. in the afternoon. But going into winter, poor choice. Yeah. Let's have a look at the futures markets. S&P 500 up 1.5%. The NASDAQ's up 2.2. Now, as far as I last checked, NASDAQ stocks weren't really getting impacted by tariffs, so that seems way out of kilter to me.
Yeah, I mean, it's a big move, but then think about where we were start of the year. It's still a long way to go on that. So I think back above the 20,000 psychological level gives people a bit of a feeling that the dust settled and we're on to the next phase now. I mean, look, I have to see what comes out this morning. There's no actual scripted time, is there, for when he's...
8 a.m.
Is it actually put in the calendar?
We made sure it was when you were on air.
Okay. All right. Well, we'll see.
See the live reaction. See the brain cells at work on a Monday morning.
Well, yeah, we'll see. We'll see.
No promises.
2 copies were good.
FTSE 100. Now, as I said on the chat before the show, beware buying the FTSE because it's only up 30 basis points, right? You see Germany up 1%. You see Euro stocks up 90 basis points. There is a pharma comment coming from Trump. Here it is. Donald Trump vows to lower drug prices by up to 80%. I think he said between 30 and 80.
Yeah.
So there's a good chance that Glaxo and Astra's get hit quite hard this morning. The ones in Asia certainly have been down between 4 and 8%. So let's just put it out there, and I'm not making a prediction, but I'm saying if Astra and Glaxo were down 4% each, that would be about a 0.4% hit to the FTSE before you start looking at everything else. So therefore, the FTSE is really up 70 basis points, if you think about it like that. However, the mining stocks, I would have thought the miners will be up 3.
You thought that would outweigh it, wouldn't you?
Yeah, or at least equate it. And then what you're left with, I guess you're left with a load of stuff like Unilever, Reckitt's.
Yeah, all the defensive stuff that will come off, but then all the banking stuff should go higher.
And let's just take sorry, Terence, I'm jumping around here. If we can just pop those futures back up. A little bit surprised that oil's only up 1.4. You know, if this is as remarkable as the equity futures are suggesting, you would have thought oil would be up a bit more.
You would, but then there's always the backdrop of the fact that, you know, Trump wants to just drill, baby, drill, keep oil low. You know, there's no, other than, you know, huge conflict, there's no real catalyst for a big jump in oil at the moment. Obviously, we've had news over the weekend, India-Pakistan ceasefires as well. There's more pressure with Russia speaking to Ukraine, Putin going directly. There's all that sort of stuff. It kind of all leads to that market just kind of being washed a little bit.
And Trump's on his way to the Middle East as well.
Let's pick up his plane.
This is just classic. I mean,
you talk about like anti-bribery or what's, you know, correct and all the rest of it. You can't even have like a sandwich with like a competitor anymore, whereas he's just taking a $400 million plane as a gift.
Is that over the limit?
I mean, he's probably going to declare that one's compliance, I would have thought.
Do you think? I mean, come on. But having said that, you read the article and you find out that Boeing isn't going to deliver a new Air Force One until 2027. So
what's wrong with the existing one?
It's pretty old, I think.
Is it?
I think
he's
so.
pretty old.
Yeah, it's true. Yeah, it's been around as long as Trump.
Yeah. But I mean, the amount of stuff they have to put on it, right, to make it bomb-proof, nuclear-proof, all this sort of stuff, like the additional cost of like blinging it up is going to be outrageous. The
first thing that I thought is, if Qatar is gifting you a 747, imagine how much you're having to go around with the bugging devices.
Well, I mean, yeah, I mean, I guess if it's meant to be like the most secure thing for the guy to travel on, you'd expect that, yeah, he would want to have it from within, I suppose.
Yeah.
You know, with all the secrets and whatnot that could be on it, but who knows?
Right. Jugger, yes, saying, please confirm the announcement of Chinese tariffs is at 9 a.m. Central Europe, 9 a.m. Geneva time. That's the important thing. So that is indeed in 20 minutes. But the Chinese have given us some clues. Much better than the American release. The American release, it sounded like it was all a done deal and everything was everything was forgiven.
Yeah.
So candid, in-depth, and productive, right, were the three words we got. However, Chinese media went on to report that the deal will include a consultation mechanism for US-China trade and economic talks, right? Now, a consultation mechanism means we're going to meet again in 3 weeks' time, a month time. So that doesn't sound great. We've appointed a lead person on each side. Hopefully it's Besant.
Yeah.
And not Jermaine Greer.
I think the whole "it's not going to sound great" thing, you can't expect that it's going to be one conversation and then that's it, right? This is going to be something that's like a back and forth.
Isn't that what equities are pricing?
Yeah, they are, but then, they usually overreact.
Yeah.
Both ways, right? So I don't see it necessarily as a bad thing if they're going to have like...
Oh, no,
continual check-ins on it.
Sorry, I'm more talking, it's a great thing. It's a fantastic, a much better this than them come out and say, we had another argument.
Yeah, we're at loggerheads, nothing's happening.
Yeah.
I like this comment that I read this morning from the Chinese, apparently coming out saying that they've got an old wise saying, which is, as we say back in China, if the dishes are delicious, then timing is not a matter. As in, it will take its time, but it'll be good when it's done.
Very good.
Yeah.
I like that.
There you go.
That's made me hungry. And then the final comment from Chinese media, they're going to carry on with further consultations respecting their individual concerns. So there are still concerns. So the major discussion point for this morning at 8 a.m, what number are tariffs getting reduced to immediately, right? Is it 80? That would be a huge disappointment. Is it 60? Potentially. 50 would be probably small positive. And 45, as BNP suggested this morning, right? They've gone out and said they think that tariffs can come down to 45% aside. I think that would see the futures kick on.
Yeah. I think more likely to be 60.
Well, I'm sorry, but 60 was in the price on Friday.
Yeah.
So,
but then this is just I guess expectation of bigger stuff. But
or we're just at the wrong level.
Yeah. Well, all will be revealed.
Yeah. If
17 minutes.
So Boise thinks 60. Have we got anybody to put a poll up? Producer Phil's gone on holiday. Are we having a laugh? He's only been working here a week.
That's a relaxed man.
Good morning to Phil. I'm sure you are watching, aren't you? You couldn't help yourself because it's raining where he is in Mallorca.
Okay.
He sent us videos yesterday, absolutely pouring down with rain. I didn't laugh at all.
Didn't they?
So the poll is, what tariff rate do you think will be announced at 8 a.m? 45, 50, 60, or 80?
Or nothing.
I'm not even given a chance of nothing. What tariff will be announced at 8 a.m? 45, 50, 60, or 80? And this is Waka Waka. Thank you. My fellow bear is out there still. This isn't good. The market is at 5,750. Going into the tariff announcements, right? This is where it jumped to. This is exactly where it jumped to on April the 2nd when we thought that tariffs were 20%.
Oh, with the old fake Wall Street Journal tweet.
Exactly.
Yeah. 10%, I think it was.
Oh, 10%, sorry.
10%, yeah. And then that got walked back pretty quick.
So let's just have a quick look at that, where we got to.
Yeah, we were looking at this last week. It's kind of spooky. It's exactly where it was. And obviously markets have got patterns and everyone likes these pretty charts, but it really has come right back to that Liberation Day tweet.
So there we go. Yeah. 5,725, my apologies, it got up to. So we're above where the market thought that tariffs were going to be 10% across the board, potentially with another 10 on China.
Yeah.
And instead, we're cheering 60% or 50% tariffs.
Yeah. It's funny how people become accustomed to things.
Yeah.
Isn't it? But then maybe that was his whole plan. Go massive, walk it back, feel like a win. But realistically, you've still gone up. 6 times or whatever it was before. That's why the old hedge fund shark Paul Tudor Jones, he was saying last week that even if tariffs get walked back, it's still going to be the equivalent of a 3 to 4% tax hike on the everyday consumer in the States, which will still have a knock-on effect on earnings, which will still mean that we test the lows of April again this summer.
Yeah.
But I mean, he was, that's a bearish camp.
This was before this, I guess.
Yeah, well, in the days prior to, so it wasn't like it was a complete unknown. We'll see.
Only time will tell.
Sell in May.
Well,
the old adage. Not advice.
We've just gone higher as well. Somebody's clearly seen the announcement, because we've just gone to 57.51. I will keep my eye on the news wires just in case. What have you got up there? Have you got Reuters?
I haven't got Reuters, but I can get updates from the desk.
Yeah. Hopefully we'll let the desk know that we're interested, and we've got about 150 people that are also interested.
Yeah.
So 7:46 a.m. we have got some early indications for you. Right. So Singers are actually calling AstraZeneca up.
On what? You still there?
Right. Sorry. Chris Beecham is just popping a headline into my ear that, Chris, can you repeat that, please? And I'll go verbatim. The tariff reductions agreed upon by both China and the US will exceed 100%. The reduction will be 100%. Okay, so that's
What's it down to 25%?
25% would be, well, no, because it's at 145.
One way. So 145 on China. China got 125 on US.
Yeah, I think that'll be the way that.
Yeah, but so what you're saying, 100 come off each?
So then, 45%. So it's the low end of range.
And that's come from Chris's crystal ball, or is he?
No, it is a headline. Yeah, it's not necessarily there's not a second source on this. Yeah, there we go. Phoenix TV, and we've got on Twitter as well. Exactly, Jugger, you're right. 145 minus 100 is 45%. But if they say exceed, maybe it's 40%. And even I admit a 40% would probably see the futures kick on a little bit.
So where are we now then? Let's have a look. So FTSE hasn't really moved too much. NASDAQ's still strong.
Singers are calling Astra's up.
Yeah.
Well, that doesn't make sense.
Well, it blows your theory out the way.
Well, if Astra's are up, then the FTSE is way under.
Okay, so they've got something called Triexio AeroShare has been approved in the UK. So I think a drug approval, that's what they call it.
Yeah. Wow. They can have some there.
Yeah.
Away from the numbers is right. Wait a minute, 100% reduction on something, it means zero. But yeah, I think they're talking numbers on percentages.
That's true.
Yeah. Boston Frank, you are right.
Sort of thing get you in the 1% club if you ever watch that.
The what?
The 1% club.
You're a lot up in Beaconsfield.
No, the TV show on a Saturday.
All right.
They ask questions in that sort of way.
Oh, this is exciting, isn't it, people? We're actually going to have some action live on air. We've got a new viewer, Dow Jones Meltdown. We like the name there. Also saying tariff reduction said to be over 100%. So let's watch out for that. The likelihood is that's probably going to be right because we've got 10 minutes until the press conference. So the chance of a leak coming out now is probably fairly high. What do we do then? Do we short gold? If tariffs come down to 45%, should gold really be 3,270?
Well, it has come down 1.5% already. But yeah, granted, it is at record highs.
Should we have a look at where that was?
In theory, you'd say, defensive plays come lower. But that said, Look at Bitcoin, 104.
Yeah.
That's supposedly the new digital gold. That's going back to the highest seen before all the trade problems.
True.
I mean, gold's just been on an absolute rip.
So gold was at 3,150 basically on April the 2nd, April the 3rd. I think it should be back there. I don't think there's.
So what, you got 125 points to play with?
Yeah, I'm gonna have another little. I'm already
what
short.
have you got at the moment?
10.
Did you get long on Friday?
I'll show you what I've got for today, which is I had a little nibble on the weekend futures, but I've got a 5675, 5750, 1 by 2, and then I'm short the 5,830s. They're all for expiry today. Do we get up to 5,830? I'm in a spot of bother if we do.
I mean, your other long stuff will go well, I guess.
I've got a little bit of Wall Street. Russell, I think I'll add to the Russell actually if we are, because Russell should be up way more than the NASDAQ on tariff news.
Yeah.
That doesn't make sense to me.
It does usually lag a bit though, doesn't it?
Yeah, true.
But I mean,
we like a bit of lagging.
Yeah, get stuck in then.
Right, so that's my plays. A bit of short gold, a bit of long Russell 2000. FTSE, I don't know, does it, the miners, the oils should definitely get a bit of a lift on this, but it does have a lot of defensives. And Germany kicking on again. Wow. Right, and good news, we very happy to announce we just hit 600 subscribers. That was it. Avi Fine pointing that out on the chat. So thank you for also buying into our plight.
Yeah.
So yeah, give us a thumbs up on the YouTube if you've got a second there. If you're not busy making a cup of tea, if you're not already tapping at your trading screen, then hit like and subscribe. We're going to take a quick 2-minute break because I want to make sure we don't miss anything on this announcement. We'll try and get some of these headlines up live for you. We'll try and keep you updated as we go. With the S&P 500 at 5,750, the NASDAQ 100 approaching 20,500, what are they going to be in 15 minutes time? We're going to find out. Only time will tell.
Only time will tell. Yeah, we've got to get FTSE above 8,600, I think.
Yeah, we need FTSE 8,600. We'll see you in 2 minutes. Welcome back, everybody. So we have got 4 minutes to the opening of the London Stock Exchange, but we've also got 4 minutes till we start to get headlines through. We're just trying to find the best place to get the headlines first. But before we get that, we will update you on some upgrades, downgrades.
Yeah, so upgrades, downgrades. We've got BP. And that's one that you've been following quite closely. They've been cut to underweight with Morgan Stanley.
Mate, come on.
Price
Don't ruin my morning.
340. Weir Group also cut to equal weight with Morgan Stanley at 2570.
Okay.
And then there were some other ones as well. Equinor cut to an equal weight with Morgan Stanley, 250 krona. Hermes reinstated outperform. Price target 2,600 euros. Renshaw raised to a hold at Jefferies, to 450 pence. And that, my friend, is it.
What stocks should we be looking at in the UK on the open here? So Prudential, HSBC, Burberry.
Yeah. Stocks that got, I guess, hit on the trade talks. They got dropped big time. But then we've also got, in terms of just general news that's out, like you said, Astra's, BP, Weir Group. And let's just see where they go.
Yeah, what else has been impacted though?
Well, I mean, you remember Legal & General? They got smashed down to 210 on the day of the April the 6th. April 7th, they've come back to 255. They've been pretty strong, so expect to see those probably kick on. But yeah, I've got the full 100 trigger page here in front of me at the moment. Rio's and Glencore's are kind of at the top being called up. Rio called up 7%. I mean, that's probably a bit unnecessary. 4.8 at the moment. Well,
the FTSE's completely the wrong price. But to be fair, iron ore is up 3%, so Rio's should be up 3%. If it's not, then that's a little bit undervalued potentially on the day. Copper only up 1%. Copper's actually disappointing on this. The commodities are really a little bit lackluster, let's say. Right, so we've got 90 seconds. We'll give you a live view from the... There we go. So that is the live view from where we're about to hear. It looks a little bit makeshift, doesn't it?
It does, but they are travelling.
You'd think it's in the Intercontinental Hotel in Geneva. Yeah, that's...
Put a China flag in the middle, maybe?
Yeah, do you know what I mean? That is hilarious. Right, so we'll keep an eye on that for you.
Keep an eye.
But thank you, Angeline, for sending that link through.
So what have we got? Okay, so
right, let's go.
They've got 48 votes. Do you see the votes in the poll there?
Yeah, let's go to the poll results. So what tariff will be announced at 8 a.m.? This is, of course, before we had the leak, so a little bit unfair. But 48 votes, that's the highest poll in history. We've got the top one, 45 to 49. So that's right. The smart people waited for the
news.
Leak.
Yeah.
And 18% of you thinking 80 plus, but that was a bit unfair. Right, so we are now assuming it is 45% if we go with the leaks, right? We're now assuming it's 45%. I'm also going to get Twitter up because, of course, this will be fastest fingers first, won't it, Pete Ward?
It sure will. Let's have a look here. FTSE's now 86.00, right? We're open.
We're open, right.
So let's have a quick look at the trigger page here in L2.
Right, okay, market going higher, 5775. They're obviously, it must be out. It must be 45% because we are getting a big leg up in everything here. Go on. US, the only thing we're getting out so far is US will retain the current 10%. Yeah, that's
all
not
still rumour at the moment.
It's because
right, China to lower tariffs on US goods to 10% from 125% for 90 days.
30%.
So it says here, China confirmed to lower tariffs on US goods to 10% from 125% for 90 days.
No, so Chris Beecham's saying it's 30.
I'm just going off what I've got here.
No, I think that there's a mistake there's one mistake in there, because Beachy's saying it's 30 and the 10% will remain, but it sounds like a news outlet might have gone out with the 10%.
Okay, well, here we go. I've got a Bloomberg headline here. Headlines coming across the terminal. China to lower tariffs on US goods to 10% from 125% for 90 days.
So that's China's side.
US to cut tariffs on Chinese goods to 30% from 145% for 90 days.
So we're at 30.
So we're at 30 for the US on Chinese, 10 for China on US, 90 days. Market likes it. So we've now got...
Are we 30 plus 10 or are we 30?
The 10 would be included within that 30, would have thought.
I'm not sure.
Okay. Well, we are now up 1% in the FTSE, 86.30.
Can we confirm that? Is it 30 plus 10 or is it 30, guys? But yeah, at least the FTSE's kicking on, people. At least the FTSE's kicking on.
Yeah, so we are now Glencore up 6.7%, Antos are up 6.5%, Anglo-American up 6%, Standard Chartered up 5%, and then at the bottom end of the board...
So yeah, GSK down 3, as we mentioned there.
Yeah.
Do we have Astras as well?
Yeah, we sure do. Just give me 2 seconds. My screen just died on me. Okay, sorry, 1 sec.
There we go, though. On the upside, Anglo-American up 6%, Burberry up 5%, Standard Chartered, BHP. FTSE still seems low with numbers like this.
Astra is off 4.8.
4.8, right, okay. So shocking price from Singers in the morning, saying up 0.5. They clearly didn't see the news. Right, so look at that leaderboard there. Even BP is up 2 with a downgrade, and we're seeing the mining stocks, we're seeing the airlines go, we're seeing anything with Asia exposure, obviously. The PRU up 3, HSBC up 3. FTSE still seems very low to me.
Where are we now?
FTSE only up 70 basis points. Right, US S&P 5,800, it's gone straight there, up 2.5%. The NASDAQ up 3%. And we've got oil now up 2.5%. That makes more sense. Bitcoin's even kicking on up 1. Gold is down 2. So good. The short on gold is working. Right, shall we go back to stock speak?
Yeah. So what have we got on the list? We're looking at BP, weren't we? They are up 1.5%, 377.8. And then we had Weir Group with a downgrade, wasn't it? Where are they trading? Let's have a look. Sec.
Yeah, so China is definitely cutting tariffs on US down to 10%, right? That's fine. To be honest, that is irrelevant, right?
Well,
US selling
from 125 to 10.
It's positive. It's positive on Nike. It's positive on Starbucks. Yeah. It's right. Nothing else. The important one is obviously the other way around. And the other way around, do we have whether it's 30 plus 10 or 30 yet? Okay.
I read it as 30 from what we've got here.
Yeah, no, fair. That would be positive. Where
are we now?
Vincent says neither US nor China want to decouple. Is the pretend... here we go. There's the answer. Here's the one I'm looking for. Where's it gone? So it's 20 plus the original 10, I think.
Okay,
so
yeah.
It is 30.
Got a comment there from Avi just saying, joint US-China statement, the US will retain the remaining rate of 10% on those articles. So it's that 10 is still within the 10 plus 30 then. You got anything else there? Rich is frozen.
Whoa, this is such a frustrating point now. I'm sure you guys feel at home as well, because you know there's a trade there. You know there's an incredible trade to do, and it's just trying to get your brain to operate fast enough to come up with what the best one is.
There's one here that says US to lower tariffs on China to include a base 10% plus 20% fentanyl levy.
Okay, so it's 10 plus 20. Right, so is there, yeah, that's positive.
To one source, yeah. So yeah, where are we now then? So we've got FTSE pushing, actually pulling a little bit lower now, 86.12 at 13, off its highs of 86.41.8.
I tell you what, looking at the way the miners are going in the FTSE, I know they're only a small part, but looking at those stocks on the upside, I'm amazed that the FTSE is down. Fair enough, AstraZeneca, that makes sense.
But you know, your earlier comment really was the case point for this, which was that you're knocking 0.4 basis off, right?
Just for Astra and GSK.
Exactly, and they are lagging more than what we thought. So they're down 5.5 and 3.5 respectively.
But Glencore,
with all of the, like you say, all of the safer defensive plays, basket or whatever you want to call it, of National Grid, United Utilities, they're all off as well. But yeah, Glen, Anglo, Antos, Rios, all up a good 4 plus.
Right.
Some up 6.
Let's see where Rios is compared with April 2nd, because now we're taking a base case that all stocks should be back to where they were on April 2nd, right? That is, so yeah, Rios is 1% higher. It's tricky to find what the trade is, isn't it? Probably Nike pre-market.
Yeah, I mean that will price from 9, won't it? Where do we close?
Oh, Adidas. Let's see where Adidas is, because that one should be up 4. Mm-hmm. Yeah, 4.7. Right, so amazing. The efficiency in markets is really shining through here. Kering up 5.6. Is that still an opportunity there? Kering so badly beaten up? Because they've had another profit warning since that April 2nd, but let's see where they are. They are also, exactly in line. We've got to find something that's lower still.
Well,
what could it be?
It could be FTSE, given we were at 88 something for this drop.
True.
So you could argue that trade at the start of the year from January to March really was the UK index, wasn't it? It was all the money was flying in, but that was when cable was down at 122.
Russell is now absolutely flying.
Did you pick any of that up?
Yeah. So Russell now up 4%. That's more like it. The Russell should be up way more than the NASDAQ. NASDAQ still doesn't make sense to me. I don't know. Let's just do our check here. Russell 2000 compared with April 2nd. Yeah, it's higher as well. Incredible. Yes, Ange? Yeah, we'll just push back. Are you all right for another 5 minutes? So,
yeah, sure.
Pete Ward.
See how these things unfold.
So oil up 3.
That S&P is going to start biting your...
Oh, the short calls are hurting. The short calls are hurting. Do I capitulate and buy my 5,850s back? That's the question.
Still higher up.
I've got to buy.
Still higher up for tomorrow.
No, I can't. Yeah, so the pharma. So how unlucky do you feel today if you're long the pharmas?
Yeah.
And
pump like this, yeah.
Yeah.
I've just seen here Novo Nordisk, the drug maker that's been doing all the Wegovy, Ozempic stuff. They're off 8% on the back of the drop in pharma pricing. So we'll see how those come in the US, because that's listed over in.
I'm on delayed, unfortunately.
Yeah, Nike will be an interesting one today because it's been beaten up, very unloved, but still, there's that core holding of people that believe, this is the brand, this is, anyone that's done any work on any sort of branding, marketing. Nike have had it for years, and yes, they haven't had a product as good as Jordan's or something of that ilk for a long time.
Don't know, the ones I'm wearing are all right.
But they need another thing like that, right? But at $55, I mean, we saw it the other week when Disney put their numbers out.
Yeah.
Quality stocks that basically can stand the test of time, that when they do get it right, they move quick. I mean, that move in Disney was pretty pronounced. And they're out with their 60 billion infrastructure rollout.
Yeah.
These companies got a lot of money. So it'll be interesting to see if all of a sudden that awakens a bit, and we see that move back up towards $70-80 in Nike.
Yeah, it's got to be up 10% today. It was down, Nike was down 17% on April the 3rd. 17.
Yeah.
So, and then it went lower from there.
Well, we've got a little bit of a pop-up on the Vietnam news, I think. But yeah, it's been...
So maybe Adidas is still a buy. Right, and there, Andrew McKelvey, he's had a fantastic trade on JD Sports. Every time we talk about Nike, Andrew updates us that, why didn't you just buy JD Sports? It's up 15% since he mentioned it.
Yeah, it's a fair point. I mean, they're going pretty well. And that was the one stock, during COVID, that was the one that everyone was queuing up outside of. So no matter what's going on, people want to buy those new sneakers, whether it's Nike.
That's true.
Hoka, or whatever it might be.
Yeah, Hoka.
Yeah.
I don't think they do Hokas, actually.
Where do they? You can only get them Deckers.
Deckers, but you can get them in office. And anyway, right, gold. Funky Gibbon saying, does gold still go lower? It's down 2.5% already, but if we look, April the 2nd, it was at 3,150. Stocks are higher than where they were on April the 2nd. So why is gold higher? This is a major de-escalation. This is better than even the big bulls had hoped for. Yeah. So why are we in a safe haven that doesn't pay any yield?
Well, I think you've got to think what's happened, right? What's happened over the last month? Do people immediately, automatically now switch to being absolute perma bulls? You can't really. You can't trust what's happened, especially now that you've seen what can happen.
Yeah.
And with Trump in power, you now know that volatility, it's come back to 21 on the VIX from a high of 35 or maybe even higher. But as an investor, you go, well, you need to have maybe a little bit more of the
Once
safe
bitten,
stuff.
twice shy.
Well, exactly, yeah. And so that momentum that's been in gold is not just going to disappear now straight away. You could argue that there is a gap to be closed there if we do stay up and continue.
Yeah.
But yeah, I think you've got to take everything with a pinch of salt.
Right, with that, taking the pinch of salt, we are going to let Pete get back to his day job. And we've got Chris Beecham coming in to give us his thoughts on these trade announcements that have been breaking live on air. Just a reminder, the US to drop tariffs on China to 10%, and US to drop tariffs on China to 30%, and China to drop tariffs on US to 10%.
That's right.
So 30%. We're going to catch up in the headlines here. We'll be back in 2 minutes with
Chris Beecham.
I was going to say something about your hairline, but I stopped myself. I'm being nice.
Thank you.
We'll be back with a couple of natural hairlines in 2 minutes. So it's all happening here live on air, isn't it? We've got the S&P 500 up 2.7%. The NASDAQ now up 3.5%. Vol down 5%. Vol back down above below the 21 level. And we've got, the FTSE underperforming. But an outperformer in our midst, Mr. Chris Beecham with the story first.
An outperformer. What a waste of time the last month has been. You've gone through all this. You've gone through extreme volatility.
Yeah.
Just to get, well, not a 10%, obviously. It's a lot higher than where you were.
But Trump has, laid down the law to China and
and then
quaking their boots.
Besant's coming and going, no, step away from the headlines, Mr. President. The line about we don't want to decouple. This wasn't the line. This was we're going to reorder the global trading system so that the US is going to benefit and China will be reined in.
Yeah.
And now it's just, actually, we can't break it because bad things happen.
We should have known as soon as somebody as smart and how else do you describe Besant? Smart and worldly was the one who was in charge of this in Geneva. We should have known it was going to be good.
Yeah, you have to keep everyone else away from the microphone because Lord knows what happens. So it's just the way we've come almost full circle now in just barely 6 weeks. 6 weeks now.
That's exactly
So what happens now? Everyone's having piled out of US assets a month ago. Does everyone go back in again now because it's all okay? Seems to be the immediate reaction.
I think we can assume, but it now stays at 30.
Yeah. Well, it's the 90-day pause. So of course there's that possibility that we unpause and then we go back again. Yeah. Do you want to just run us through the exact details as we know it, Mr. So as far as we can understand it, so the US is bringing its tariffs down to, let me just find the headline so I don't say the wrong thing. The US will cut tariffs on Chinese goods to 30% from 145% for 90 days. And in return, China will lower its tariffs on US goods to 10% from 125% for 90 days. And they will also, according to the announcement from Greer and Besant in Geneva, the Chinese will also rein in some of their non-tariff barriers, the stuff that's much harder to define. And they will also continue to talk and set up a mechanism for having further discussion. So this is, I don't think we can call it a trade deal, as maybe it's too much to call it that. It's a beginnings of a proper discussion. And I think the market will at least be relieved that the two sides are continuing to talk. Because that's the most important thing. I think it's possible to see markets begin to weaken a touch from here because the news is now in the price and maybe we reassess where we go. But I think as long as there's the hope of more talk coming through, that's enough for the market.
While we're talking, let's just get that press conference live on screen. We can't hear it, but you've got the subtitles. So let's just keep that up, guys, as we chat through what we think the repercussions are.
Yeah, and looking at futures for shipping in China have already surged again. So it's almost as if they're turning this crucial global trading relationship back on again. Yeah, having switched it off 6 weeks ago. Essentially, there was essentially a trade embargo 6 weeks ago between these two. Now it's back to normal again.
Normal-ish.
Well, normal-ish, and this is the bearish thesis, is that you can't break this stuff and then glue it back together again without ramifications further down the line, that in 2 or 3 months we'll start to see this properly reflected in the data. Yeah. And that's maybe the bearish case that I think still has relevance here.
And as he's saying, right, the whole plan was to cut the budget deficit. So is that now out the window?
Well, exactly. Where does that go? Besant's view was if you do tariffs properly, you can raise 500 to 600 billion a year. Now that doesn't plug your hole.
We need an update on that number.
But it goes a long way to sort of, I think, showing commitment on the US end to fix its spiraling deficit, which, as you've pointed out endlessly, is a major problem, or it should be a major problem.
Yeah.
So if Besant comes in, let's be generous here and say if Besant is here, it is, okay, you've had the initial tariff shock, you've shown them how serious you are, let's sit this down and work this out. If you can get to a position where the US is gaining, I don't know, 300-400 billion in revenues from tariffs and manages to cut its budget in other ways, it can get back to a reasonable degree of fiscal sustainability. Not overnight, clearly, but within, I don't know, a number of years, which is what markets would like to see. They don't expect things to be sorted overnight because that would clearly tip into recession.
Yeah. What does this now do to interest rate and inflation expectations?
Yes, because that's now all the Fed cuts are now being chucked out the window as we speak. I think if I've not even had time to check the Fed watch this morning.
But isn't this actually positive for?
Well,
it brings the risk of inflation lower.
Well, potentially, yes. So the tariffs, because tariffs will be inflationary and then deflationary.
Yeah.
So if you take away the inflationary bit, and maybe you don't have such a big hit to economic data, maybe the Fed can go back to gradually cutting rates enough to keep him happy. Because at the moment we are, for June, it's the chances of a pause are at 89%. So the market essentially just is pushing out the expectations of a cut. We've still got a pause for July as well at the moment, leading the way.
So it's taking that out of the market, but also you're taking a lot of volatility out of the market, aren't you? You're taking away all those tail risks.
Yeah.
So you could easily see vol down to 18, 19 again in the next few days.
It's back to normal in the short term, I think, because you've got 2 or 3 months now, maybe or maybe a month or so, where things can carry on for the time being. But we're still on data watch here. We're like the Fed. We're still very much data dependent. What happens when the next round of GDP and PMIs and earnings season, crucially, comes through,
which we've got in the next 2 weeks with the real companies. Not the ones that are, you'd almost say that Netflix is the new utility.
Yeah, because it's a safe haven from tariffs, exactly. Well, until you put tariffs on non-US films, but that's another matter.
True. But you're not going to cut your Netflix.
No.
At very worst, all you'll do is you'll drop to the one with the ads.
Yeah.
Which is actually better for the company.
I suppose so. So we will get a couple of weeks of getting a rough idea of how things are faring, and then in July, when we go around earnings season again properly. Because this is the interesting thing about earnings season so far. If you're a company that's not really stressed the impact of tariffs so far, you've done okay in earnings season. If you've been honest and upfront this time around, actually your shares have got whacked.
Yeah.
Because it doesn't pay to be honest with the market at this point.
I just seen one of the comments from Besson is that the talk's gone very well. We'll carry on talking, and we now managed to get away from the very unfortunate escalations that have happened since April 2nd. There was only one person escalating it.
Exactly. What happens? You have to hope that they've squared this off with the man in Washington, because if he wakes up and discovers that his Treasury Secretary has been freewheeling in Switzerland, and he goes through the roof.
Yeah, so, I told you 45. Yeah. 45 was the base.
Exactly, and he fires him live. That's the thing. If Trump were to fire Besson, but it's not going to happen at this point. It's really interesting that the lesson a lot of countries will take away from this is that the way you deal with the US is not by giving in; it's by standing up to them.
Yeah, he's lost a lot of his political capital here.
It is, and as Buffett would say, it's very easy to burn that capital. It's very hard to get it back again. And you could argue that he has essentially burnt a lot of that, and all the stuff he was going to do in 4 years has now been made much more difficult, because people know where the pain thresholds are. They know that he is still vulnerable to this kind of thing, really.
Right then. So, what do we think, Chris, of the UK move? So obviously it's impacted by the farmers, but we are seeing Glencore up 7.5 now, Anto's up 7, Anglo's up 7, Burberry up 7.
What a day for the miners! Oh, it's incredible.
Rio's up 5. I'm gonna have to have a little nibble at Rio's, I think, because I just see that getting bought all day. But it is tough. Be careful, everybody, because buying things up 5% on the day is tricky. You leave yourself a lot of room for disappointment there, especially because we had such an increase into it, right? These moves would make sense if we were trading at 5,400 on the S&P going into this, or if we were trading at 8,400 on the FTSE.
Yeah.
But
38 on the Dow, but
yeah,
it's there's an awful lot of good news being priced in right at these levels. We are back on the Dow. We're not yet back above those 2nd of April highs on the Dow, but we are for a lot of others. And of course, look at the DAX surging towards 24,000 in early trading. It's 120 points off 24,000. This is what I think there will be the damage to the sort of by US is still there. So I think non-US assets continue to do very well because people will just want a sort of safe haven from any additional turmoil.
Yeah.
But obviously, all the money that's come out of US stocks over the past 6 weeks has to go back in to some extent. So I think you will see a very supportive flow. Look at the Russell up 5% now, 21.28, its highest level since early March.
That's the only one that really makes sense to me. The NASDAQ up 3.8 versus the Russell that was equal didn't make sense at all. But that's now starting to reflect. I would imagine the NASDAQ, maybe gets to the somewhere around its high on the day here. But Russell I could see keep on going. The Dow I could see keep on going.
Yeah.
But yeah, I don't know.
Markets are very much in optimism mood, and I think the problem is that the data has to then match up over time.
True.
And there's the risk there that it doesn't.
So, Chris Beecham, thank you very much for joining me on this huge morning that we've seen joggers saying, I call that last month's market manipulation, upward wealth transfer, straight into the White House. And disparity. Andrew McKell will be asking, why has Barclays risen so much compared to others? That's a good question.
In mornings like this, you always want to understand why. And I think it's the same way that people aren't choosing when they're selling everything on the way down. There'll just be an urge to get in everything because it's all going up in the same direction. You can argue Barclays is going to benefit because the US economy will benefit. There won't be a global recession if you want to rationalise it. I think it's just a get me back in at any price now. In the same way that a month ago was get me out at any price.
Yeah.
I don't care where.
That's true, isn't it? If this feels like the exact mirror opposite of the Monday of April 7th,
April 7th. Yeah, exactly.
Yeah.
Yeah, when it really that was probably the pain threshold when obviously the odds were going as well. So
that's right. But yes, selling puts on the S&P 500 seems a lot safer than it did maybe this time last week. Good. Right. Well, I hope everybody is happy at home.
But it's great for holding that and then having a beer in hand, you see. It's all about having a beer. Hey there, welcome back. For those of you that were with us this morning, what an exciting moment, because I can tell you it is like a live trading floor outside. We were monitoring all of the feeds there for you, and we were also tapping out and making sure that our networks, I was anyway, trying to find out whether we could get any early insight into that number.
I was going to say, you'd find this hard to reconcile with people who caught that at the start. You talking about cutting hedges with a beer in hand.
No, we were talking about your weekend.
You were talking about cutting hedges whilst drinking beer. This is, this is not the safety first approach to trading that we hear you espouse every day.
Well, you have to kind of like, try
mix up the risks.
Yeah, mix up the risk, both sharp edges. But if you know what you're doing, then, and hedge your bets, then you know what you're doing.
Good.
There you go.
Hedging your bets. Anyhow, this morning, boom. Here we are, back like nothing's happened.
Yeah, I mean, like, it's such a crazy time, isn't it, Matt? I mean, taking a look at this is the 1 minute to show you the reaction there. But let's pull it back to the daily, because, we're back down to the 20s.
Well, it's one of these. I never really understand the modern phrase of gaslighting, but haven't the markets been gaslit here? You say you're going to do something that you're never going to do, and then come back and are going to claim a victory in negotiations that never happened because you've gone back to where you were at the start.
Yeah. And then claim to be like the knight in shining armor, riding in with the horse.
It's all very strange. I'm not sure what it does for your credibility down the line, but
clearly he's like Teflon for some reason. Markets still are, completely, sensitive to everything that he says. But we should have known. I mean, with Besant, early on, and saying that everything's up for negotiations, we should have known that it was all kind of like, never going to fall far from, how the economy and business, really works. I mean, you can't break something and then hope to leave it broken for a long time and then markets not notice.
Completely, but it's an interesting one, because I suppose, as Rich was alluding to at the end of his slot there, it's like the really sharp move you saw on the downside. Everything has gone up this morning in a blanket. Is that the right move? Is there overreaction to pick out what are the actual winners from here? What has moved too far? So it's that sort of sit back, have a look, make your own assessment, stop picking time again, because there'll be names that have risen with the tide that perhaps were not affected so much, and now's the time to take profit, or maybe to look at a short on these, and others where there's more upside to be had, because the story is real, I suppose, if you believe that the economies are all good as gold anyhow. You're not looking at any externals if it's all about trade.
Speaking of which, we've got loads of people coming in on the chat. Good morning, Waka Waka. Good morning, Genghis Khan. We even have a Genghis Khan now on the chat. And loads of people on the chat. Arsax, Andrew McKelvey, top of the morning to you. There's lots of chatter here about, leaning on a short position. Genghis Khan says there. Seems too good to be true in terms of, I guess you're talking about market indices particularly. It feels like the risk now. It's back on.
It's back. Well, yes, but the risk is towards the downside. There's no more positive trade comments to come. We can only be rolling back again, can't we? And again, I think it's more bullish news from the Americans rather than the Chinese, who have sat back and waited for the Americans to come to them.
So does this underline what we've been talking about the last week? Is it underlining that it's better just to stand pat and wait till the Americans come to the bargaining table, rather than we talked about
ignore the noise coming out and sit there, maintain a silent stance and wait for sort of the penny to drop.
Don't be like Britain, basically. We talked about this last week. The 90 days, right? So now we have this another 90 days.
Two rolling 90 days.
Yeah. So people, reset your clocks, like we were talking in the chat earlier on. Reset your clocks for 290 days now. What do you expect to see in the coming 90 days? Because as we've heard time and time again, what I'm getting from all of this, Matt, is that everything is up for discussion. You know, everything is still in flux. We haven't seen a real difference. Later after the show, I'm going to check on, you know, what this means for like shipping companies, because we know that they were slammed, right? Your one Old Dominion, your Hapag-Lloyd's, your FedEx, they're all slammed because they're starting to see the drop in the shipping, the containers coming through. We're hearing anecdotal evidence of lots of port workers losing their jobs. Does this mean we are now back to where we started, where, you know, trade's going to start flowing again, and we're going to see good data coming from the ports?
Well, it's interesting, isn't it? Maybe the world listened to Donald's comments about how many dolls you should have, and we're all, you know.
What is it? One Barbie doll per child?
I think it got up to 4 by the end of the day, but it started at 2, which is you know, of course true, but where does it go? You know, there's, you know, does the world sit back and following talks of tariffs and decide, no, we don't need lots of cheap goods and we're going to buy quality again? Probably not. It's, you know, and it's, again, we were talking hedge clippers, and you were extolling the virtues of top-end Makitas and Bosch clippers, and I said, no, I've got some generic Amazon brand. They work the same.
They work just as well.
This will spark a huge debate.
I'm like one Makita only. You know, the kind of like, once you use Makita, you can't, you know, look back. But
what's it doing for you that's much better?
The battery's better. It just does the job better. It's smaller, niftier. I was just saying to him when you did it, why he was asking me, Matt was asking me, why do you have both a cord and a cordless?
Right.
And I said the cordless enables me to hold a cold beer whilst I'm, you know, sorting out my hedges. Speaking of that, we always not only talk about how to hedge your trades here, but we also talk about trade ideas. And I have a new one today.
What commodities is it going to involve?
Not commodities. I know I'm not like known as you know, Gold Ange or Niffler. They've called me as well. But I have a transport watch list for you, trader friends. So putting that up here so that you can hopefully see it. But here are some of the names that were impacted when we saw the start of this, you know, trade dispute going on.
I think logistics would be the line here rather than transport.
Well, logistics, but also, you know, yes, I was typing this quite late last night and messaging Andrew McKilvey as well, because I was looking, if we have, right, and I see this as, you know, okay, we're going to be going back to normal trade for a bit, for the short term. I think these names will have a bounce because they were the ones that were hit when we saw, you know, the trade dispute first start. And a lot of these names as well, especially Old Dominion Freight, they're the ones where we're getting data about, you know, job cuts and port workers losing their jobs. And it's a very sensitive market, people, very sensitive. I was intrigued at the weekend doing my catch-up analysis and reading that I couldn't do during the week. That the biggest export by the UK to the US were cars. Like, I didn't think that it would be cars. I thought, you know, cars might be in like top 5 maybe.
Well, that's because we don't export things, do we? It's all services. The biggest export is services. The biggest goods is
goods are cars.
And cars are high value.
I'm like, really? So mini?
There's not a lot. There's not a lot that's manufactured.
Land Rover, but I thought we'd like move most of manufacturing to like Slovenia. You know, Discovery's been moved to Slovenia. I know that because I had one of the last UK-made ones. It was interesting. Farmer's the other one that had
Farmer is not up this morning. I think, as I saw UK Farmer, it's still sat there. Not a lot said about the effects of tariffs. AstraZeneca struggling again. Of course, Glaxo never performs well in any market.
And also, you know, the fact that Donald Trump said he's now looking to lower the price of US medicines But also he's now continually talking about, the crosshairs have now gone to drug stocks. Everyone's kind of like waiting to see what happens there. But do you think we're going to see the same? It's kind of like saber rattling and then actually not much happens?
Well, it's an odd one, isn't it? If you want cheap drug stocks, you let all your patents lapse and let the Indians make cheap drugs for you. That's which is not actually what you want to happen in your industrialized economy, because it undermines all your IP. But
don't they make like
the race to the bottom? That's where you go.
Interesting data point. India makes something like 90% of all paracetamol.
Yeah, that's where all the manufacturing is, and they've got very successful businesses, copying expired patents and I don't like to say taking IP, but that's kind of where we are, making generics rather than branded, and that's why a lot of the problems in the US are the incumbents protect the branded goods, and which they're selling through to the health services, and it's doesn't result in cheaper prices for anyone.
Totally. So this executive order aimed at cutting US prescription drug prices, so take a look. We've already seen
snappy title.
We've already seen sort of like the impact, right, on the UK drug stocks, GSK, AstraZeneca, down 3% and 4% there respectively. But pay attention to the Pfizer's, your Eli Lilly's as well. They might get a pop higher. Well, Eli Lilly is just ever so slightly higher. Remember, that is an all-session stock here on the IG platform. Pfizer also down slightly, but
Those are trading,
that will be in
15 minutes.
In 15 minutes.
And of course, we keep on getting these these very positive stories about the weight loss drugs coming through, and the champions of the weight loss drugs, that Mounjaro is that much better at everything by all accounts.
Apparently Mounjaro is the preferred for the older generation.
Well, it seems
I don't know.
These studies that it has greater success against.
One last thing in my life that is still something I enjoy, which is eating. I do not want any drug that takes this away.
Completely.
But yes, as Matt alluded, I was about to glance at my clock there, and he gracefully dovetailed. We have 15 minutes to go. So obviously looking at these two all sessions there to see what kind of impact we'll see after the GlaxoSmithKline's, the AstraZeneca's fell away from the numbers. Chiming in saying lifting and shifting to a new location will take significant time, and also need to pick up on the Chinese not producing quality goods. That's a real issue. China has dominated manufacturing for decades now. Product consistency comes from years of refinement.
Well, which is actually quite interesting, because again, I'm sure because you like going around car showrooms, but the quality by all accounts of the Chinese electric cars is so much better now than it was in just 5 years, that there's not shoddy build anymore. These are products that people want, and it's refinement is there at the bottom end of cheap plastics. It's a race to the bottom, but
it is a race to the bottom.
The idea that you can't make the quality is kind of the misnomer that the Europeans sort of cling to.
Yeah, and say, well, they're not going to be able to deliver this, but actually, given the years of refinement, away from numbers. Do you remember the time? Here's showing my age now, when things made in Japan were considered, it's shoddy, don't buy it.
Well, yeah,
it says made in Japan. How could you buy?
I don't know. That's a real long time ago. Because Sony for a long time was that badge of quality, wasn't it?
Yeah, it's like, oh my goodness.
I'm only buying a Sony.
Yeah, and then it became Sony Walkman. Yeah. Right? It's got to be Sony.
It's got to be Sony.
Now every calculator's got to be, Japanese, or it's moved. And I my humble opinion is same with the cars. I was driving a Hyundai, testing out the Hyundai Santa Fe. There was a time in Southeast Asia where the joke was, why do you need a coin whenever you test drive or you drive a Korean car? Because you would use the coin and scratch the side, and you see recycled, hot chocolate tins.
Okay.
But Andrew McKelvey saying, and why has the FTSE fallen back? Let's have a look.
Well, realistically, why was the FTSE going up? Because there was no new news as far as the FTSE was concerned. FTSE had been a strong market over the past few weeks. So it's again this talk of news comes out, everything moves at once. That's opportunity. Things like see the news, trading programs react, buy everything. Sit back. That's where the opportunities are. Make the real assessments and pick the winners.
Yeah, this is the thing, isn't it? We're now still in that. We'd like to think that maybe the worst is behind us, but actually we're still in that data-driven. Don't trade the rumor, trade the facts. And
well, I don't know.
Lots of people out there, you'd be surprised, like, oh, I've bought into, I don't know why, but I think it's going to be good, right? But you kind of like, well, the data point hasn't come out yet. Jobs is out this Friday. Why would you do this before? It's a really volatile time at the moment. So tons of people out there, and don't forget, we had this huge expectation, prior to 7:30 this morning, we're talking about having a poll about what the tariff reduction might be, and it was like everything from 45 to 60 to 70 to 100, and look where we are now. It's really hard to second guess this, and the FTSE. I feel was a lot of people piling in because of the concern with what was happening across the Atlantic. That kind of fueled, much like the DAX, right? Well, a repatriation of assets. Let's have a look. Well,
yeah, the DAX been, FTSE. The UK was never really in the crosshairs throughout the whole tariff talks. So it's take the drug companies out, and it wasn't there was a talk of punitive effects on the UK. Europe, of course, I think Trump would still like to think that he's got some sticks to beat Europe with. He's not a fan.
Yeah, no, he's made that very clear.
Yes.
In case anyone's wondering, he's made that very clear. And in fact, the change in sentiment amongst my European friends is quite remarkable. In the last 6 months, it's gone from maybe Trump doesn't like, and now it's like, oh, maybe they are the enemy, right? Andrew McKelvey, and also don't forget the fact that everything that's happened across the Atlantic doesn't change the underlying fundamentals of the UK.
Yeah,
the economy is still weak, right? We still have data points showing that consumer confidence remains in the doldrums, unless you're buying, DIY tools to sort out Matt Arbor's vast garden or field. And there are now expectations that the economy might worsen for a 5th consecutive month. We've got the Bank of England on the rate cut trajectory. What is it? 2 more expected this year after the one they just did?
Yeah.
It's really, nothing's kind of pointing up there in terms of fundamentals. Plus then you've got this, US-China trade tension, slapped on top of it.
Completely. I enjoy that. Bitcoin is always digital gold, and gold is falling. This is the wonderful crypto story, isn't it? Crypto is a great asset class because there can never be any bad news. Bitcoin is either a NASDAQ proxy or it's a gold proxy, and it just pick and choose. It can't be bad news. It can't be affected by anything. So we always see it trending upwards. I don't know. Either it's the best thing ever, or it's a Ponzi scheme. Who knows? But that's the effect we see. That Bitcoin has gone up this morning as gold has fallen, and Bitcoin was going up as gold was going up. It's a strange one.
I'm going to chime in with a message I got overnight because I was on the Coinbase app, and so it came across from a really good old friend, strategist from the city. It says, you can come up with any theory about crypto that you like. That's the current story that drives the price. Yeah. Just go with whichever story.
It's wonderful, isn't it? And it's sort of existentially, if you're going to create an asset class that can never have any bad news.
People out there, if you're one of the Satoshis, is it Satoshis that created this?
Yeah, well done, because that's
on that Japanese vein this morning.
Yes.
Yeah, and you can come up with any theory.
Yeah,
right?
and it's interesting. Yeah, so obviously we saw the Bitcoin tear up last week, back over 100,000 on the basis of safe haven flows with gold, and risk is back on. Bitcoin goes up as well. It's it's an interesting one.
It is an interesting one.
Everyone, try and be a Cassandra for so long, the thing still goes up. There's still lots of people out there.
Yeah, let's bang the chart up for our trader friends here, and there you have it. We've got and just a reminder, this is for pro traders only.
Yeah, but then of course overlay the MicroStrategy on top of it, the Bitcoin squared, and the premium still holding for. In a real world where MicroStrategy still is moving X times the Bitcoin move for holding Bitcoin.
Yeah,
magic money.
Magic. What would you say to those out there that have a theory that because Trump essentially has said or suggested likes Bitcoin, and I mean, let's be clear here. I mean, what Trump's been doing recently,
Trump likes Trump coins.
Trump coins, Melania coins, any coins, right? This is bullish for the Bitcoins and MicroStrategy as long as he's in office.
Well, it's what's the real story? Is the real story about a deregulation of crypto? It's about overregulation? You can spin it either way, and that's the wonderful world of these things. It sort of stands to reason. It's quite obvious that we move to a world where regulators will have to embrace crypto because so many people are holding it, and it's have your slice of the action almost to get your teeth into this, and to stop wrongdoing when the wrongdoing comes from the Oval Office. It's quite hard to stop. But
yeah, Monkey Man asking as well, why did Bitcoin drop to 80k at one point?
Well, it didn't drop as much as the rest of the markets. We saw the move down to 80k when everything was selling off, and broad-based sell-offs. Everything comes off. Why do things fall? People close out profitable positions to cover their margin on other positions. So it's if you're looking across your portfolio, a simple portfolio where you hold Nvidia and Bitcoin, your Nvidia's fallen 35% and Bitcoin's only come off 10%. You're selling a bit of that Bitcoin perhaps to support your Nvidia.
Right.
There's that general selling pressure across market sell-offs. Everything tends to come lower as people, across balanced portfolios are closing everything out to support margin calls.
Right, that's tons of questions coming in about Bitcoin. I can see it on my email as well. We have run out of time, unfortunately, because Martin is waiting in the wings. But Monkey Man, Waka Waka, any of those that want a really cool theory that I am looking at and trying to trade on, I will send it to you via email. The thing to look at for Bitcoin is the US Treasury, not the Fed. Not Trump, but US Treasury. And yes, Matt Arber's right. Many of the central banks, including the Bank of England, have had their own digital currency for a while, but they're watching to see how,
Let's
Bitcoin...
pick the wrong meme to be, Eric.
Yeah, to before they take action. So we got Martin Harris coming up. Thank you so much for joining us. Always a pleasure. Send us a picture of your hedge next time. Get that in. All right, we're going to get this break, but stay right there because Martin Harris is coming right up. Hey, welcome to the opening bell for all sessions, and we are off, trader friends. Let's have a look, and it is looking like a risk on, and a day that we've seen that trade deal come through between the details rather from China and the US. We got the US Tech 100 up 3.3%, Wall Street up 2% also. In terms of, let's have a look at my watch list here. It's risk on pretty much for FTSE and Germany as well. Taking a look at the FTSE first, if I may, taking a look at the winners. Anglos up more than 6% there. Standard Chartered also up more than 6%. Antofagasta miners really ripping higher here. Rios as well. We're going to have Rich very happy about those moves there. Also, just taking a look at Intercontinental, which was out with earnings not too long ago. That was also up. It is up more than 3% there. JD Sports, those of you that like trading JD Sports instead of the individual names like Adidas and Nike, JD Sports Fashion up more than 3%. Good day for the banks as well. Barclays up almost 3% there. Let's have a look at the losers, but it is mostly a risk-on day. Not forgetting, we spoke a lot about the impact on drugs after Trump said he was looking to cut prescription drug prices in the US. AstraZeneca down 4%. Also, taking a look at Hikma Pharmaceuticals and also GlaxoSmithKline heading south there. BAE Systems down 3.5%. We are seeing European semis there. Let's take a look at all sessions here for you. Now looking at the winners. Upstart up 6.2%. JD.com up 6% as well. Tilray up 4%. And on the losers list, we're seeing Novo Nordisk down 5.6% there. Novo Nordisk, of course, one of the producers of the skinny drugs. Beyond that, we've got Johnson & Johnson down almost 2%. Let's have a look at some of the other movers here. Alcoa is up 5%. I was talking earlier about some of the commodity-related stocks as well. Lyft also having an update, up almost 4%. Taking a look at some of the car makers as well in the EV space. NIO, very volatile stock there for those of you that trade NIO. It is currently up 5.7%. But really, pretty much up across the board. Taking a look at the indices for you and also looking at some of the ones I was talking about earlier. Don't forget, we have European logistic companies that are now moving higher after that deal between US and China. Let's take a look at Maersk first. So AP, Moller, Maersk, they're up almost 10% there, actually more than 10% now. And also Hapag-Lloyd, you saw that watch list I was looking at earlier. So keep an eye out for more of this if we get more trade deals to come, because Hapag-Lloyd popping higher there, more than 10%. Kuehne+Nagel, another name up as well, and DSV and Deutsche Post. Don't forget, freight forwarders, of course, make money based on the volumes of global trade. So when we see any news at all about a cut, lowering of trade barriers, then you're going to see this as a positive for their shares, because it's going to be positive for their profits, right? Blake 7, bigger BS, saying let's go. Blake 7 talking about Rolls-Royce. So let's have a look. Rolls-Royce for you. Now here we have charts up of Rolls-Royce's daily chart, but let's have a look at the 10-minute chart for you, if we may. Here we are. Now, Rolls-Royce, interestingly enough, this is coming from at a time when we have seen quite a few of the, let's take a look at my list for the things like drones and also defense, because we have seen some of these stocks move lower. Take a look at Rheinmetall there, down 6.5%. BAE Systems also down there, 3.5%. Hensoldt down 11%. For those of you that watch the space, there is a clear fall there in these defense type stocks because Zelensky has said that he is ready to go and meet Putin. This is on Thursday, I think, in Turkey. And what that has meant is that many aerospace and defense companies, including the ones here, are lower. So perhaps that as well is causing the fall there. Also watching, this whole kind of impact on the flight from safety. Remember last week, trader friends, I talked about the unwinding. When we saw the trade and tariff tantrum happening earlier this year, we saw this huge wave, this expectation that we have to run and head for safety. So you saw the likes of safe havens like gold, like the euro, like the yen rise. And I did say that if we see the start of this unwinding of uncertainty, we see more trade deals and that snowballs, then you're going to see a selling of safe assets, right, to unwind all this. So we're taking a look at gold for you first because this is one of the ones that a lot of you trade down. Almost 3% there. So this is why we always say that times are unique now. Sometimes at the weekend, most often at the weekend, late on Sunday. If you were like myself, I was on my sofa last night. Might have sent a few emails out, half asleep to you trader friends as I'm answering emails. Andrew, I think I sent you one. RSAX, I might have sent you one, not so sure. But I knew I had to be in early this morning because Phil's in Menorca, so I was covering and you saw me messaging and hopefully Rich wasn't too perturbed by me shouting in his ear about what was up and what was down. But you're seeing gold down almost 3%. Let's have a look at the euro and yen crosses as well, because we have just a few minutes to go before we get Martin Harris on. Euro dollar there, down 1.2%, and take a look at the US dollar versus the yen there for you. So stay tuned because we are going to get the macro view with Martin Harris from IG Smart Portfolios next to take a look at what the next 90 days has in store. Hey, welcome to the show, and I'm joined by Martin Harris from IG Smart Portfolios. Welcome. How was your morning? It was exciting here. I was just kind of looking out for you amongst this like sea of people, couldn't spot you. I guess you were head down.
Yeah, head down, trying to make sense of all of the news coming up from Scott Bessent, a bit thin on details.
It's very, very, I mean, like over the course of the last, I think, 4 months, 5 months, that's been the consistent thing, right? The whole devil's in the detail. I mean, I think this week we're still waiting on the nitty gritty.
Yeah, that's right. Yeah. So in terms of tariffs, sort of kick the can down the road.
I think that's their modus operandi. If they're not detailed enough early on, then they then get to kind of like...
They control the narrative a bit.
Yeah.
So I think this allows Donald Trump to win no matter which way it goes. And then because he can then reel it back and make it his win.
They can also, a lot of people are calling this the dip your toe in the water strategy. So Trump and co can kind of like, well, we'll say this, which alludes to this, and see how the market reacts.
Got you. Yeah, no, that's fair enough. I mean, I think that there is a lot of whispers in the ears of the various advisors and people close to Trump, and whoever can really get their message across according to the group that they're sort of lobbying for, that's they win.
Yeah.
So I think that's how it works.
So just whacking up my screen there, Dom, if you can get that up for us. We are seeing pretty much a risk on the day there. I mean, FTSE is pretty much flat there. But, really, it feels like a bit like game on.
Friday night was such a yawn fest. I think volumes are down 25%. Really, everyone just waiting for news. Boom, we have it. Markets are firing again.
Yeah. And we're seeing this, head out of the safe havens as well. So gold's down almost 3%. We saw, as I said last week, guys, watch for the unwinding of this trade. If we see deals, which will then snowball into more deals now, we're, of course, seeing this US-China deal in play. We're seeing the euro, that gained ground, but now euro dollar falling to about 112 to 110 after those tariffs were slashed. Also, we're seeing a similar weakness in the yen there. Do you kind of look at this and think that potentially we're kind of almost back where we started? All this noise, it was a lot of fuss for markets.
Why were we so worried? A little over a month ago, almost pulling our hair out. So I think
our client managers looking like they were about to, either throw up or drink more coffee.
It was intense.
It was.
I don't think I'll be able to forget that. I mean, I've got PTSD from the day of liberation. But if you look at sort of positive developments on the peace front, you've got Ukraine and allies looking ready to propose sort of this unconditional ceasefire deal to Russia. That is sort of accompanied by a slew of sanctions against Russia if Russia rejects it. India and Pakistan have agreed to a ceasefire. Trump is claiming credit for that. Hamas is believed to be, they've mentioned that they're going to be releasing the last US hostage ahead of, as a gesture of goodwill, ahead of Trump's visit to the Middle East. That's going to be this week. And then the sort of US-Iranian nuclear talks are going ahead, sort of differing news. There's also thin on the news front, but you've got all of these sort of de-escalations. And so that's where one of the, the defense stocks that had such a strong run will be sort of softening on the back of that.
Yeah.
So that's one thing. And then we also saw just on Friday, Expedia, one of the stocks that I watch, sort of echoed this, down 7.3% on Friday. They echoed that kind of soft travel narrative that's been consistent this earnings season. So typically that category has been really resilient, but the recent uncertainty has been hitting hard. And so the management there are talking about a real step change for both inbound as well as domestic travel in the US as well as Europe. So that was last week's news. Now we've got markets firing again.
I know, like all cylinders, right?
Exactly. If your pension has recovered, it's normally like the number one sign about consumer spending and consumer sentiment is how well your pension's doing. So it's all up in the air.
Speaking of which, all up in the air, just checking in on oil as well, because, you know, we saw recently, you know, oil prices remaining quite weak. And just showing you my oil watch list.
Yeah, I see OPEC looking to increase supply there. So we're expecting oil to soften and potentially stay typically below $70 a barrel.
But now it could be a different picture. You know, we had last week, like you say, it's so much happens in just a flash, right?
Yeah.
Last week we were talking about, you know, weaker oil prices, and we were also talking about the fact that OPEC and the Saudis reportedly saying we can deal with lower prices for longer. You know, there was mood music that they were going to pump more oil, and you know, we're seeing oil today up 2.3%. Because, you know, now there's this expectation that maybe the global economy has a chance at, you know, putting some gas into the tank, as it were. Morgan Stanley also, I noticed a note out this morning, trader friends. Morgan Stanley out with its note saying they expect oil markets to enter a meaningful surplus after the Northern Hemisphere summer, right? Putting energy companies' earnings and buybacks at risk. So maybe the theoretical trade here is that oil, if it does recover, will cover slightly, but then after summer, it's just going to go back, you know, on that downward trajectory.
I think we're not seeing any of that hard economic data yet around growth. So if you know, the fears were for a recession, we may still get some sort of a short-term recession based on the effects that we saw last month. You know, those sort of the trade sort of effects of that still need to clear through the system. We still have a 10% tariff on US allies at the moment. So this deal with China is looking very thin. And again, this is I don't want you know, you don't want to almost peg your strategy based on, oh, everything's fine again. We still have a 10% tariff on US allies. That hasn't been worked away yet. The deal with China, the details are thin. So there's no real indication yet of why the economy would start firing in terms of requiring more energy and more trade. So positive sentiment, positive narrative, but not yet followed up by actual fundamental data.
Yeah, so still data dependent, like JP says. It'll be interesting because in the coming month, so June is kind of when I am expecting more concrete data about how some of the tariff tantrum has bled through.
Yeah.
And also, you know, it'll be interesting to find out whether or not after today, we're going to have more and more companies coming out and change with a changed outlook. So perhaps if you're the CEO or CFO, right, of a company, you're kind of thinking, oh dear, we don't get something done, then we're going to have to release this, you know, kitchen sink it and have a cloudy outlook just to cover ourselves. But will that change now, given what we know this morning?
I'm not too sure yet. I mean, what we typically, if we look at the sort of three themes that we saw in Q1 earnings, were one, management talking about tariffs, two, talking about AI, and three, talking about the state of the consumer. So in that order, one, as I mentioned, the tariffs haven't yet gone away. We just have positive news about them. And so they're going to affect second quarter earnings. The consumer is going to be affected by tariffs and affected by the negative sentiment in markets that we saw from April that really carried over until now. We still haven't yet gone back to the highs of January. So that's the thing, is that, you know, the start of the year, we're still below where, you know, if you look at sort of mid to end late January, where we were hitting all-time highs on multiple markets, we're not yet at those levels. Europe, however, you look at something like the DAX, almost, I think, touched recent highs today. So that's still going to be in effect. Until that shift happens, we don't have the answer.
How about chips? I love the space. To me, when I heard what happened this morning, I was out there sitting in for producer Phil, because Phil is in Menorca on a beach somewhere, hopefully, drinking beer. Very jealous.
Yeah, he's one of the only, it's like the travel companies are complaining about reduced volumes, except, he's trying to prop them up.
Yeah, and he's going with a shed load of other people, so he's definitely doing that. Menorca, I've been there, is a lovely island, not very big, so I'm sure they're going to make a dent on the economy. But taking a look at chips, because as you know, I like trading chips, and we are now seeing Nvidia. I mean, this was the news this morning to me was a step in the right direction for chip stocks. Currently approaching 122 there, it has had several days above that 113 level. What is your view now on the chip sector, Mr. Harris?
So I think going back to earnings commentary, I'll give you one of these, is that AI was overly positive in earnings commentary, essentially where companies are coming out and saying that they're now starting to see tangible cost reductions and productivity enhancements due to AI. So that entire AI CapEx spend is expected to continue. That props up the likes of Nvidia, who at the moment are still in a winner-takes-all type scenario. They don't have competition at the high end of their computing sort of abilities. We're still concerned about China's ability to replicate some of the stuff that Nvidia are doing. So, they're effectively trying to reverse engineer a lot of the chips that they still have access to, the H100s in China. If they can do that, it's going to be a real problem for Nvidia. So let's see what happens there. But so Nvidia still, we like the stock, but it's the moat is shrinking, getting shallower.
And speaking of which, let's have a look at the rest of the space. Let's have a look at the chip gear maker. This is ASML. After that news, up 3%. They're up very strongly indeed. Also checking in on ST Micro Electronics, and the shares traded in France up almost 6% there. I mean, call it 6%. It's a really strong move there. And also, I'm sure that Bessie and Melexis are likely to be higher as well. BE Semiconductor there, up 6%. Melexis also having a bit of a bounce. Look at that. Melexis up more than 7%. This is after we had an upgrade earlier this morning. I think it was Deutsche Bank upgrading Melexis to buy from hold because this completion of inventory correction across auto semis. This is the thing as well. A lot of people don't realize, or I spend a lot of time testing kit in cars, as you know. And the weekend I was driving the Santa Fe, which has a very long wheelbase. People, trader friends, I'm looking for a new car in the SUV section. If you know of any cars I should be, please whack it here.
Get a wagon or a saloon, not an SUV, please.
Can't do wagon. Were you talking about the Jeep?
No, an estate car.
Oh, I have a lot of kit. I have a lot of stuff. I mean, I don't drive during the week.
Estate car is just as big. It's not a. These SUVs are hatchbacks that have been juiced up. They're not bigger inside.
I need to carry lots of people and go through farms. There you go. I need that high wheelbase so I don't get stuck in the mud. Okay? Don't drive during the week.
All-wheel drive Audi estate.
But every single time I try one of these cars, this is the Santa Fe plug-in hybrid. It's yet again, I mean, the amount of kit. You're driving a supercomputer around, people. I mean, the number of chips in this, and the reason why I talk about this is because the deal that we saw this morning is a positive for the semiconductors, because anything that is related to this tariff news flow, it will be these chips, because these levies have an impact on the car sector.
Yeah, that's right. But I mean, Trump took away the tariffs on chips and mobile phone parts, components a few weeks back. So potentially, this is now just an addition to. We need to see what the new deal with China looks like. But he had already exempted chips from tariffs.
Is that the repeal that Biden put on? Is that the one you're talking about?
Are you talking about the
super fast chips?
But that's to not sell them to China. Let's see. I don't think that they're going to take that away. That's the only edge that the West has against China at the moment, is access to those chips.
NVIDIA's Jensen Huang is really concerned about those restrictions because he's concerned that it will mean that China will develop its own and then it gets more dominant in that space, you see. So it's two sides of the coin.
Yeah. I've got one promotion that I have to put out before we leave.
A shameless one. How much time we got, Dom, Terence? We have 2.5 minutes.
2.5 minutes. This will be 30 seconds.
Is this to do with your the banana that's strapped onto your Dell computer? Show.
It's on the
show.
Okay. Very famous piece of artwork that's $6.2 million. No, so almost as important as that. Interest on cash. IG are currently running a promotion.
That's right.
For new clients. So if you've got anyone who's on the chat at the moment, and I expect that you're all clients already, but you might have friends or family that are not yet clients. IG are paying 8.5% interest on cash until the 31st of August. So something to go and have a look at. All that you would need to do is place a trade before the end of this month. So that would be on an investments account. Share dealing, ISA, SIP, smart portfolio, and your uninvested cash earns 8.5%. So we've doubled the Bank of England base rate. So that's a promotion for you to take to your friends and family.
And better than double.
I don't give you nothing.
Exactly, and better than double because the Bank of England's expected to have, what, 2 to 3 more cuts this year?
Potentially 2 more cuts this year. We've got 2 more meetings. So there's another meeting in June and a meeting in August, I think. And so they could cut further. Mm-hmm. But knowing Bank of England, they're going to be really conservative, and I think they'll be slow to roll out the cuts.
Well, it remains to be seen, right? I mean, it's also, Bailey said it is data dependent as well. So if things get worse on the global economic front as well, then perhaps, there might be a change. But yeah, they tend to kind of sit and wait rather than kind of come out as first reaction. Interestingly enough, too, the 8.5%, 8.5, isn't it?
8.5.
Yeah, is amazing. There's one other fantastic thing about ISAs here as well, and that's talk us through the flexibility of our ISAs. I really like this.
We have the flexible ISA. I mean, this is if you need more information, have a look at Google. But effectively, flexible ISA allows you to withdraw your ISA and return it within the same tax year, so without it impacting your ISA allowance. So that's the benefit of flexible ISA. And there's not every ISA in the UK is a flexible one. The firm needs to meet sort of more stringent reporting criteria, and IG is one of the firms that do that. So you don't get it everywhere, and it's fantastic if you ever really need to access your ISA. Just one for Andrew McKelvey, 8.5% is crazy, but it is only for new accounts.
So Andrew, if you already have an account, but if you haven't, or you've got a friend,
this is your first trade,
spouse,
and it'll be for So if
sibling, exactly,
and this is your first trade,
pet,
needs to be before 31.
Hamster.
Yeah, pet hamster. And on that note, NVIDIA is the only big stock that we haven't yet had their earnings released. They're coming out on the 28th.
Exactly. They always wait, don't they? They wait till all the banks kick off the party.
Yeah, so
then you get the big cap, middle, and then it kind of dies down for a bit. And then we have NVIDIA, kind of like...
Exactly. And it's now become like one of the big economic indicators. So you worry about jobs reports, you worry about CPI, you worry about the NVIDIA earnings results.
Yeah, and I watched the press conference as well, which times in nicely with my dinner time. So I have it on and I cook and I watch and I make my whole family watch it. So you can imagine how exciting the Ong household is that evening. Yeah, Andrew McKelvey, 8.5% is crazy. Given my Santander fixed last year, 2024, because I maxed out that ISA, 4.75%. Time to wrap, but just very quick, don't say we don't give you anything here, because we just gave you, Martin gave you a fantastic, a piece of information there. But just quickly putting up my screen, Dom, before we go. But here we are, luxury goods jumping after that US-China trade respite, shall we call it. But as I said earlier, whenever you hear these things, kind of negative news from China, for luxury analysts, it is actually a buy the dip for the likes of Richemont and Hermes, and they are both up strongly at the moment, but it is across the board. Right, Martin, thank you so much for joining us.
Thank you, Angeline.
Bring your banana on again soon. That banana, his piece of art over there. But we have Chris and Axel coming up next, so stay where you are, because we have Axel coming up to talk about charting trade of the week in this very exciting moment when we just had that US-China trade respite.
Hello and welcome to Trade of the Week on Monday, the 12th of May, 2025. And let's have a look at today's trade. And it's a difficult one to pick because basically markets are a bit wild now that China and the US seem to be talking about a possible trade deal. and having both lowered the tariffs in the meantime. So my trade won't look at the US dollar or gold or indices, because all of those have rallied or have moved very, very sharply overnight. But what I would like to look at is New York cocoa. As you can see here on this chart here, you can see that the futures contract has basically tested resistance just below 9,500 on this daily financial bet several times in April. And we are currently testing the downtrend line. And it looks to me that once again we could fail in this area and then perhaps head back down again towards the 8,000 zone where it was trading for most of March. So for that reason, since the medium-term trend is still pointing lower and we're close to resistance, now ideally that resistance is around 9,450, 9,500, but because we're close to that and also at the downtrend line, excuse me, I expect further downside to be seen rather than that resistance area to be broken through. And that technical reason gives me the confidence to go short on New York cocoa at around current levels. Ideally, if you can, if we do see a further bounce around 9,450 or so, with a stop loss around 9,700. So this week's trade of the week is to go short New York cocoa futures around current levels up to perhaps 9,450 or so, with a stop loss around 9,700 and a downside target at around 8,000. Welcome back, and let's start off technically speaking, where I answer your questions to do with any technical analysis on any markets that you wish to look at. Now, I've got a question here. Have I? Not yet. No question. Oh, yes, I've got one here to look at the German DAX 40. Well, what you can see here is basically we gapped higher and we're now trading in all-time highs. And this is fascinating because the German economy is not doing that well. But as you can see here, we've completely outperformed US markets and are now trading in all-time record highs. And also have this gap open. That means we've jumped higher. Ignore this red one here because that's Sunday trading on the daily financial bet. But what we are seeing here compared to Friday's close is a much higher trade here. And also what we've done in one fell swoop, we've basically taken out the previous record highs going back to the beginning and middle of March. So usually what tends to happen is that we fill this gap. So short term, perhaps what might happen later on today is that we might actually over the next day or so close this gap, because all the euphoria with this new trade talk between the US and China has led to this market spiking higher. But perhaps the reality might kick in whereby investors will realize that after all, we do still have 30% tariffs on Chinese imports into, and that could still have quite a negative impact on the US economy. So we'll see whether this rally continues into new all-time highs. If so, the area to look at would probably be around 24,000. We're very close to there. If not, we're going to close the gap, and then we'll see whether we will hold, which is very likely, at this previous highs, which go back towards 23,470 or so that we saw back in March. So yes, very bullish market indeed. I've got a question here to look at JD Sports. The JD Sports one is one we look at quite often, don't we? Is it still going down? Is it going up? And what we saw here is a trend line break a few weeks ago. And then more importantly, it's not just the trend line break. And this trend line, as you can see here, goes back to the highs seen back in September of 2024. But what we've done is we haven't just broken through the trend line. We also then, if you go further to the left of your chart, rose above the previous high, the reaction high. A reaction high is simply a high which is higher than the one to its left and to its right. And here we closed above that high on the 29th of April. And then there was a slightly higher high just above that one here, going back to the high from March, late March. And that one we also took out a few days later here. That leads me to believe that we, at least medium term, have now formed a bottom, because we made a new low, went up, broke through the downtrend, and then created a high above these reaction highs, which is a short-term bullish trend reversal. Now the question is, can we break through the previous resistance area, which is basically made up of these highs going back to late January and February, and really also the lows going back to November and December of last year. So you always look at a cluster of previous lows, if they're in the sort of same area, and previous highs, and that should act as resistance going forward. And you can see here today, even though we rallied quite strongly, we stopped where? Well, basically where the mid-February high was made so far. So we can see here that short term this has acted as resistance. We'll have to see whether we can go through there on the daily chart closing basis today or not. If not, can we do so over the course of the next few days and weeks? If that is the case, and we can break through this resistance area here going all the way up to the November low around 93.30, then we should open the way for us to go higher and test the next higher resistance area, which is made up of these highs going back to the beginning of December and also beginning of January. And these were made around 104 and 105 or 106. So right now, the trend is your friend. We've broken through the downtrend line. We've taken out previous resistance. That is positive. We're currently testing resistance though, so we'll have to see whether we can break through there or not. If we were to fall back through the last reaction low, so where is that? That is the low, which is lower than the one to the left and to the right. And that takes us all the way back to the 2nd of May low at 77.68 on this daily financial bet. If we were to fall through here, then my view would change, because that's the last reaction low. But right now, we're on track for further upside, and JD Sports looks as if, at least medium term, it has changed its direction from a downtrend into now a medium-term uptrend. There is another one here, another question, that is NELASA, is that forming a bottom or not? Let's have a look at it together. So I don't know anything about this one, but what we can see here is a very clear downtrend, a long-term downtrend going back to 2002, probably even longer, yes, 2021. You can see a very long-term downtrend, and we've been bobbling along these lows here, which take us back basically to the lows seen a decade ago, even below there, and we are currently holding above there. So we've had this huge spike higher here, and then we've come down again. That's never good news. When you have a big spike higher and then you don't see the follow through, then you could see sideways consolidation or even the resumption of the previous downtrend. By the way, this is what we're seeing intraday on the DAX today. Let me show you that just very quickly here on the German DAX index. Can you see the same pattern if I go into a very short-term chart, let's say 3-minute chart? Spike up this morning at 8 o'clock, then we're topping out here, coming down again. Now we're trying to trade back up again, but we're trading sideways so far. So a similar pattern, but here, that's on the daily chart. And what we're seeing here is basically a sideways trading range, because every time we go back down towards 200, we can hold here at very good support. So that's really, really strong support. And that would be your stop loss if you're still long, if you're long. I gather if you want to go long here, well, you need to take out not just this resistance here, the late April highs around 246, but also ideally this spike high here going back to the 9th of April around 267 for us to form a reversal and break out of this sideways trading range that basically we've been in, as you can see here, since the beginning of the year. So right now it looks as if short term we're bouncing back, but ideally I want to see at least a break above these highs of late April for us to then ideally also take out the 9th of April high. If that were to be the case, as you can see here, that was made right where the 1st of January low was made, so that's resistance. But if we can take that out, we could head back up again towards the 300 area, or even 350, take us all the way back up here. But right now, at the moment, it's difficult to say what's going to happen next. It's just trading sideways, because we may test this area here around 245, 250, and then fail again here and come back down again towards the 220 area. We'll have to see whether that will be the case in the days ahead or not. But short term, on an intraday basis, like everything else, today it looks bullish. And I've got a question now to do with the NASDAQ 100. Now, this one's really interesting as well. NASDAQ up nearly 3% today on the futures contract before the market opens later on. So let's just have a look at the NASDAQ. And we can see here on this daily chart that basically, I still have we've just jumped higher here, and we've taken out the late March high, which for me was the line in the sand to say that we are no longer in this huge bear market here, or not bear market, but in this declining market here. This is looking short-term very positive, but we're entering this resistance area here. Can you see all these lows going back to December, January, and also early February? They are all around here. They take us all the way up to about 20,834. And together with the early March high at 21,071, they still may act as resistance. We'll have to see whether we can hold there or not. If we are not capped by this resistance area, then the trend, at least the medium-term trend that we've seen since the April lows, is bullish very clearly. You can see that, and we may actually be heading back up again towards the highs. So that is a possibility, but we're entering this phase now where there's a lot of resistance, and who knows what will happen in that area. So short-term, yes, the fact that we've broken above here, if we can close above here today, which is very likely going to happen, does indicate that the bearish sentiment we've seen between late February and early April is now no longer in place, and instead we are seeing bullish upside momentum take us into this resistance area. But we may lose upside momentum in that resistance area and just trade around it in the coming days and weeks. We'll have to see whether that will be the case or not. But yes, short term, clearly bullish. Where would you question that bullish view? Probably if you were to fall through the 7th of May low, the last reaction low, as you can see here. This low was made below the one to the left and to the right. So that's the last important point. If we fall through here, we would most likely also fall through an uptrend line. I think that's slightly lower, but you can see here we've got this support line here coming in, and then we've got an accelerated uptrend line coming in from this low here to a next higher low. So that would be our first indication that perhaps we could come down. But what we've seen also is a price gap as before. So we could, over the next few days, perhaps retest the late March high if we get into resistance here and come off again, and then perhaps close the gap with Friday's high, which was made at, let me just have a look. Where was this one made? At around 20,100 or 21,000 basically. But right now, as I say, I mean, the trend's your friend, and that short term is definitely pointing higher. As you can see here, we have a series of higher highs and higher lows. So I hope I've answered this question. There's another one to do with Lithium Americas Corp. Let me just put the code in here. And let's look at this one. Here we are. So what can we see here? First of all, let's always, I'm not familiar with this one. So if you don't know, go to the longest period you have available to you. And you can then see on the monthly chart that we've come off these highs going back to 2022. And then it's very similar to the chart we looked at before, the NEL ASA. And you can see here, we are trading sideways on the monthly chart in this sideways trading range. Within that trading range, on the daily chart, We have bounced off the April and the March lows, so that is positive. We have been grinding higher, and we're in the process today of trying to take out this high, the last reaction high on the 7th of March, and also the high here on the 4th of February. If we can manage to do so on a daily chart closing basis, it would indicate that the odds are higher for us to break out of this sideways trading range than to reintegrate it in the short term. And that could then lead us towards the 350 area, because that is also a confluence of resistance. Because see here we have previous highs, the 7th of January high coming in there, the 21st of January high. And can you see how these highs tie in with the lows seen back on the 19th of November and the highs seen on the 17th of October? So that whole area here for me, what you can do if you want to do that on your chart, you just take the previous highs and lows which cluster around, and that gives you an indication where the resistance area might be going forward. And then obviously resistance doesn't mean that the market's just going to stop there. It may just go right through it, but quite often you will see here, for example, when you had this move to the upside, we came straight off that resistance area, and we did so again here. So right now, what we're trying to do is take out this resistance area here. So let me just draw this one in. And if that is the case, we will then go to the next bigger one. So basically, this is how it works. Let me just try to find my rectangle here again. And here we can look at probably this side with this one. So that's a minor resistance. So you can see here we've been trying to go through it intraday. Now, if you want to make it wider, you could say, well, actually, I believe that these highs here are also of importance. So in that case, we haven't taken out. Can you see these highs here going there and here? We haven't taken out that resistance area. But it's quite wide. So I perhaps will just go to this lower one here and say, okay, if we can break above here today, if we can break above the highs seen here, then just if we can break above 320.5 on a daily chart closing basis, it could indicate that we are breaking higher and heading towards the 350, 360 resistance area, 66 resistance area. But we are currently testing resistance, and the last 3 times we did test this resistance area here, we did come off. So that is also a distinct possibility. Now, if we do come off, what can we say about the chart? Well, basically, if you put your trend line on here, you can see that we are still short-term in an uptrend and have been from the 8th of April low. And a trend line break would need to be seen, and we need to take out that last reaction low, that's to say the low from the 5th of May here for us at 288.50 to then become perhaps short-term bearish again. So we're currently testing resistance, and we still have bullish momentum at the moment on this chart as well. Now, I've got another question here to do with currencies. So you can see the US dollar index is indeed appreciating because the recent talks we've had over the weekend between China and the US, and both of them lowering their tariffs on the other countries' imports into their country for 90 days, is positive news for the US dollar basket. And you can see here the US dollar basket is very interesting because we did slip through, and this is a weekly chart, the previous support areas going all the way back to basically February of 2023. And then you can see we also slipped through and closed on a weekly closing basis below the July 23 lows here. And we did so on this week here on the 14th of April, then went down again, but then had this bullish hammer formation, which in itself is not a bullish reversal signal. You need to have a next candle after that to then be above that hammer high. So that means we need to then go above this high here, which we did in the following week. And ever since, we've been grinding higher. But the question was, could we take out that previous resistance area? Because these lows are now resistance, and we've managed to do so. So you can see here that the US dollar basket is actually now reversing short term. We are on track for our 4th consecutive week of gains, and we are trying to break through this steep downtrend line. Now, if we can do so on a weekly chart basis this week, then how far could we go? Well, we can go towards the previous low here, going back to March of last year. That's about 102. And if that gets taken out, then the next one is these lows here going back to middle of March, and that's around 102.80, 103.20, these lows here. So if that were to be the case, but as you can see here, we've got this resistance area, this resistance line, and on the daily chart, we're currently testing it. So who knows, we may actually fail at that resistance, because it also ties in with the early April low. So interesting to see what could happen there. And basically, if we then were to fail there and were to fail and also slip back and fall through the uptrend line here, the support line, because we only got 2 points, then this longer term US dollar downtrend would actually be considered to have continued, to have resumed. So it's going to be interesting. We are currently at this inflection point, whether the US dollar can appreciate further in the coming days and the end of this week, or whether we are going to fail again, and this could just be a correction in this otherwise still very clearly defined downtrend that we've been in since the beginning of the year. So you can see with regards to equity indices, FX markets, and the US dollar in general, we are in the process of testing important resistance area, or having taken them out with regards to the equity indices in the US. But the question now is, can we see follow through, or will we see some sort of reversal or failure at this resistance area, for example, with regard to the US dollar in the coming days, as the economic impact of these tariffs and the data will start to come out, which shows the impact of those tariffs on the US economy, on the global economy, on inflation. We've got inflation data out later on this week. So all of that will be followed very closely by market participants. Technically speaking, we are at very interesting points at the moment, and we need to watch those very closely. Thank you very much for watching Technically Speaking with me today, and I hope to see you again next week.
It was the best of times and the whatever this was. We're here. It's Thursday, May 8th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, as we're here to take you through the rest of the trading day. Futures market closes at 5 p.m. Eastern. If you're on the platform, on the website, tastylive.com, thanks for joining us. Come over to YouTube. Tell us what you're trading, what you think of this market action today, where we get a UK-US trade deal. It was leaked last night around 9-10 p.m. Eastern time. We get the formal announcement today shortly around 10:30 a.m. We see stocks meander and then ultimately rally as the President of the United States says that it's a good time to buy stocks. Into the close, though, we do take a step lower. There was a report that's been circulated from the usual suspects of Twitter, including people like Walter Bloomberg and Unusual Whales, that you're looking at a potential step down in the China tariff rates from 145 to 50% as soon as next week. So tariff talk is front and center. It wasn't exactly a straight buy America kind of day, though, because while stocks were up and the dollar was up and gold was down, bonds are ultimately a little bit weaker as yields press to the upside. We have some interesting earnings out here after hours. We're waiting on Coinbase right now. So there's a lot to discuss as we wind down this trading week here on Overtime. Dylan, talk to me about what we see with this UK-US trade deal here. Is this the start, the beginning of the end of all of this noise? Did we really accomplish something here, or was it just good press?
I mean, I believe the primary motivation is to command the world's attention at all times, more than any particular policy outcome. And so every time, doing an individual nation-state deal, one by one, I mean, how you could do 180 deals or whatever it is. So I just think that this was obviously a silly deal. I mean, the fact that you have to sort of act like you've negotiated an adverse relationship with the United Kingdom is comical. And so I think that the market kind of dealt with it exactly how to me, I was actually encouraged by the stock market today, which had no choice but to rally when the president said you should buy stocks, because he has a history of front running his own announcements that way. And then I think the market was rational to pull it back in when it was left with nothing more than the actual news of the day or the news of the last 24 hours, which is more or less immaterial. But I do think that this is one in what will be an ongoing series of so-called deals.
Ilya, it appears this could be some of the low-hanging fruit that's picked first. The UK, you've got a Japan in there, a South Korea in there, you know, allies, people that we've historically had good relationships with, and then we can kind of move on. The UK seems like it's the lowest hanging fruit, though. Will all other deals that come down the pipeline come as easily as what we apparently see here today, which is, I don't know what the UK really gets out of this. We still have a 10% tariff rate in their direction.
So this is the whole thing. The UK, okay, fine, is the 9th largest U.S. trading partner by volume. We run a trade surplus with them. So it's unclear who, even in the convoluted parlance of saying that a trade deficit is evidence of a country taking advantage of us, which is abject nonsense. But let's take it at face value despite its idiocy. We have a trade surplus with the UK. So even on that logic, this is not the culprit that we need to be targeting. But okay, fine. They're reciprocal tariffs, everybody gets hit, so we strike this deal. What is the nature of this deal? There is to your point, still a 10% tariff on the UK that stands. If you want to play the logic game, tough as that is, with all of this, that means that the reciprocal tariff floor that was announced on quote-unquote Liberation Day is in fact a pillar of policy. That stands. We did, on the flip side, lower the tariff on UK cars from 25% to 10%, which is, I mean, how many UK cars do you see in the street? Not exactly a big deal. Maybe this helps Waymo with all of those Jaguars they've retooled, but that's about it. This is not exactly a huge piece of the economic puzzle here. So you wonder then, okay, well, what does this deal accomplish and what does it say? Well, it doesn't really say anything particularly positive, though the markets clearly liked that there was a quote-unquote deal, whatever that means. Now, the UK has, of course, downplayed the scope of it, even as they sort of warmly congratulated the US on it, but this doesn't say anything about the likelihood of a deal with China where things are acrimonious. And most worryingly, it does say that this 10% thing is a real thing. And if that's the floor, then tariffs have just gone up 5-fold in the US. And that's horribly damaging for global growth.
How do you interpret all these port chiefs specifically? I'm thinking about an interview recently with the Port of Long Beach in Southern California, and then there was another one circulating with the Port of Seattle, with these folks saying that that we're coming up on that we're about to see that the empty boats or the non-boats or the empty docks are sort of cycling in over this next couple of weeks. How alarming is that? How real is that? What are the consequences? How big of a supply chain / consumer product disruption is the decline in port arrivals on the West Coast?
My sense is that there's probably still a train of shipments that are at sea and coming because of what we saw as the front running of the the tariffs. We saw that, of course, in spades in the U.S. GDP data, but we just got the latest numbers on the PMIs from the U.S. and finally from China this week. We saw all of those melt-ups in manufacturing activity, in exports. We're supposed to get export numbers out of China today that say, whereas we had 12.4% growth in March, the April numbers have a rise of 1.9. So all of that melt-up seems to have run its course. A lot of those ships are still at sea, I would suspect. And so we'll get a kind of hump in arrivals. But the issue is, of course, what happens next. And I think there's probably more of a smoothing in this than sort of the more hysterical reports of empty shelves suggest. We're probably not looking at empty shelves, let's say, for the next several months. But what then? And that's going to look, I suspect, nasty, because both of these countries are essentially posturing. I think both of them want this on-ramp. Trump said earlier this week, the tariffs are at 145%. That's about as high as they can go, so they're going down, as if to say, look, like, I'm telling you what I'm going to do if you negotiate. And China responded saying, well, if you want to negotiate, you got to lower the tariffs because this whole thing you started. And that gets you to a kind of puffed up chest stalemate where everybody wants off, but nobody wants to look like they punked out. So are these talks in Switzerland going to go anywhere? We'll see, but the damage is being done in real time.
Dylan, do you feel like this is a market where there's risk being short into the weekend, right? By all logical outcomes here, if you think about this, there are meetings in Switzerland on Saturday when the markets close. There is a fairly high shot that we have a gap open with news on Sunday night. How does one approach this market? Do you go in the weekend as an optimist? Do you go in as a pessimist?
I mean, it's just so speculative. I mean, it's basically pure.
It's so speculative. It's
toss a coin. I mean, so yeah. I guess the one thing I guess that occurs to me is maybe you do some sort of you find something with an expanded volatility related to the China situation, which I'm not even sure what that would be, and just be directionally neutral and short volatility on the expectation that the most likely outcome is actually a non-event.
I do want to quickly.
Volatility will be wider on Friday and tighter on Monday. Would be Sorry to cut
you off here. We have two earnings reports that are out here after hours now. Affirm Holdings as well as Coinbase. Affirm in line, but its revenue is actually down quarter over quarter. So the stock price here is taking a little bit of a hit after hours. Affirm now down 8.68%. Likewise, Coinbase earnings are out. It had a bigger spill. It's since recovered modestly. That's COOM. Now we want Coin. That's down by 0.88% now here after hours. It was off from 208 down to about, we'll call it 199 briefly. And it is since flashing back. Dylan, sorry to interrupt you there. Wanted to just break that in as I see people talking about it in the chat.
I'm just saying, like, the only way to deal with the China news, in my opinion, is either to ignore it, have a slightly longer term time horizon, or use it as an opportunity to sell some sort of pre-weekend volatility that your hope's going to come in on Monday.
Coinbase earnings here, EPS of 24 cents versus an estimate of $1.98. That seems bad.
Oh boy.
Let's just go through the numbers here. Yeah, that's not great. And that's not the right number. EPS of 250, like, that doesn't make any sense. EPS of 254 beats the consensus forecast of 218, which is above the 165 in EPS for Q1 2024. Revenues were up 44.6% year over year. by 2.07 billion, but that was below the consensus forecast of 2.09%. Everything looks pretty. There's some misses, some beats. I don't know if anything stands out. That number just didn't make sense. Why would there be an EPS of 24 cents? That's no, wrong. Fake news. In any event, guys, Ilya, same question to you. I mean, how do you approach a weekend like this, knowing that you face a significant gap on Sunday with a higher likelihood than we have in recent weeks?
I know how I am approaching it, and for me, it's not to get caught up in headlines. It's to let the price action tell you, because that's the only thing that makes any sense. If you look at the price action, I think that will invariably be your guide, at least in managing risk. And in any case, obviously, any kind of open-ended risk in this environment doesn't make any sense in my mind. It's why I've always, in all of my exposure here, have looked to verticals to cap risk. The only areas where I'm not doing that is in the currency futures, which are liquid and trade around the clock, and I'm using micro contracts there to keep everything contained. So for me, it's managing size, but more importantly, it's locking in risk. But other than that, I think you have to go where the price action leads, and where it leads for the S&P as a kind of bellwether for the stock market, in my mind, is still a better bet on the downside than it is on the upside. It looks like we have all kinds of evidence of technical damage here. I think, in particular, on the daily chart, you have what is about as textbook of a bearish technical setup, a topping setup, as you might envision. I mean, you have a clean evening star candlestick pattern at exactly the trend-defining spot in the price sequence here. So you've retraced all of the hair on fire in April. You've come back to the point ahead of that where the initial kind of recessionary concern in markets from mid-February to mid-March settled. Then you had this obviously overdone kind of sovereign currency crisis type thing that the markets were kind of testing out in the US. It didn't hold. It makes sense that it didn't hold. You come back now to essentially the starting line. You're right back to where Liberation Day kicked you off. It's as if that day never occurred as far as the price action. And now you get back into, in my mind, a recession conversation. But you can make any which narrative. The bottom line is you've reset that scare. You're back to where you started. You can't get back over, and you have to if this is going to be a rally that lasts. If the recession scare is really gone and not just the crisis, then this is it. The time to decide that is here. And the technicals give you a clear topping pattern and a failure to overturn it today with fading momentum indicators. Now, that sure does look textbook toppish. It's not confirmed, but for me, it's enough to hold my shorts until I am told otherwise. Now, if there is a blistering rally tomorrow, and I get, let's say, a clean 4-hour close above the high for this week, okay, back up. But otherwise, if the price action isn't saying it, I'm not doing it. It's the same thing with the dollar. It's the same thing with gold. All of them moved in the wrong direction for what my exposure is today, but none of them crossed any red lines for me.
I don't think we've crossed the red lines either, Don. And I'm just from a tactical perspective right now, till we get above that 57.73 level from April 2nd, I think it's a better risk to reward to lean short than lean long.
I agree with that. I mean, I think that the risk is that because the market is now pricing trade deals, the market has been saying for a couple of weeks, oh, this is not what it appears to be. There's going to be a bunch of deals. This is all going to be mostly, theatrics, not without real economic consequences, but the real economic consequences will be more related to general loss of confidence in American leadership and short-term disruptions in supply chains. But to the degree to which either the deals take longer to have, it's almost like a buy the rumor, sell the news. You can see even that UK deal today kind of hinted at it, where actually announcing these bullshit deals is going to actually have a negative impact on the market.
When does that change in behavior?
July 4th.
So we get to the end of this 90-day window and we have concepts of plans, memorandums of. I mean, this was basically a term sheet that was signed today.
Right.
Yeah.
Right.
Yeah.
Right. I mean, like the details to come. A UK official is out here talking after hours that they see the 10% tariff as a baseline. They're going to continue to try to negotiate that down to get the effective tariff rate lower than that. And they see this as an ongoing conversation. So frameworks, again, we're on the off-ramp. That's great. But we haven't, dotted every I and crossed every T here yet. So hopefully some of the tariff rates do come
close to it.
We need to get some of these things resolved quickly. Hopefully there's more in the pipeline. If he rattles off one a day for the next week, I think it's going to be great for market confidence, right? If it's all of a sudden Monday and there's the Chinese delegation goes home from Switzerland angry, and we don't get anything from Japan, India, South Korea, market might start to lose its patience again, because there's a lot of time that's passing and a lot of countries to get through. And there are mechanisms to do this in like blocks, Ilya. Mm-hmm. They could do this through the WTO. Or maybe like,
oh yeah,
to the
we have institutions for this, don't we? But no. See, in my mind, the reciprocal tariffs thing was almost like saying we're the WTO now. There's the WTO over there, and it has its rules. Here's our rules, and you negotiate our rules with us. We are the WTO.
Ilya, a few days ago, you and I were feeling pretty schmarmy about our positions in gold, feeling a little less optimistic and smug today.
Yeah.
Is this we talk about the buy America, sell America dynamic. Stocks up, gold down, dollar up today. Bonds, we'll leave to the side for a quick second. Are we looking at the stars aligning here? Is gold giving us a clear signal? Is the dollar finally giving us a clear signal that we've turned the corner and we need not worry about the economic impact? The market already has that priced in. We need to think about what comes after.
I don't think that's what this is saying. Obviously, there is an unclenching here. There's no question. The dollar is particularly strong, which is not great for me. I'm still short, modest short. But if you look at the euro, if you look at the yen, if you look at the pound, if you look at the Aussie, if you look at the Canadian dollar, go down the list of individual inputs, because obviously DXY is an old legacy basket that's terribly skewed to currencies that no longer exist, like the Deutschmark and the franc and the lira. So I wouldn't sort of do technical analysis on that, or even sort of price dynamics analysis. But you look at the euro, you look at all of these things, and sure, the dollar is stronger, but it hasn't crossed any red lines. It's at the bottom of the range for the euro, for the pound, for the yen. All of those currencies are sustaining their April gains, and really their gains since the beginning of the year, though the dollar has managed to recover basically to the most recent range bottom for those currencies. But that's really it. There's not really a breakout here that's discernible. So far, again, if the price action shows it, sure, I'll step right out of the way. No problem. But it hasn't shown it. And so I remain unrepentant.
Unrepentant. I mean, I might tap out line for stocks, right? Gold, it's going to be $3,200 an ounce. Stocks get through 57.73. I will let the price action tell me. I have my concerns right now. Risk to reward for certain things leans in one direction. Dylan, people tweet this at me all the time. Dylan's so good with oil. Dylan nailed oil this week. People in the chat, what's Radigan doing with oil?
They better check themselves before they wreck themselves, my friend. That is an ill-advised way of thinking. I mean, I'm not gonna. You can think what you need to think, but you better
don't think that. Don't think that.
Don't be thinking about that.
Okay, so what does a Mr. Dylan Radigan think about oil here? Because the OPEC news scared the heck out of the market at the start of the week, of course, right? And we find ourselves now not only trading back to having filled the gap from the open, but we're sitting at 2-week highs here in oil prices. Is this just a reflection of India, Pakistan geopolitical risk, Iran geopolitical risk around the negotiations? Or
no, I mean, I've been saying this. I think that oil is trading more as a proxy for recession/growth expectations more than it is conflict expectations. And I think that oil, I'm sounding a broken record, but I just feel like oil at those at its previously lower prices was seriously divergent from the growth expectations of the stock, or the growth/recession, growth/lack of growth expectations from the equity markets. And that if you believe in the equity market, which I kind of do, not entirely, but I kind of do, I just thought oil was at a price extreme and expectations for economic slowness were too low. And also not just economic slowness, but to the degree to which globalization exists and to the degree to which global trade exists, objects make their way around the world generally propelled by some derivative of crude oil. And so the other theory, I guess, could have been that, well, gosh, if there's going to be a trade war that stops things moving between China and the United States, or Europe and the United States, that not only will there be an economic slowdown, but the degree to which there is economic activity will be less energy intensive, because the overall shipping rates, meaning the amount of products being shipped, is also going to be lower. But to the degree to which there's going to be deals, or there are deals, whether it's a UK deal, South Korea deal, Japan deal, whatever the deal is, and they're going to keep coming. And to the degree to which the slowdown is not that severe, which is a subject of great debate, obviously, at this point. But that's where I was at now, relative to as was the case last year. When oil's in these middle areas, who could know, right? I was bullish on oil a minute ago when it was at a lower price point for the reasons that I just described. I don't know that applies right now. It's more middling, and to your point, there's more sort of ambient conflict energy out there because of the whole Pakistan-India tit-for-tat situation.
Yeah, Ilya, how are you approaching oil here at 60? It's obviously a different setup than it was back at 55 near the start of the week. It's a nice recovery. Is oil's rally today? Oil up, gold down, dollar up. Is this all the same story? That this big scare for global growth, we've backed away from that edge, and therefore assets need to reprice a world where we're not looking at, a U.S. economy going into severe recession, but maybe a few quarters of bumpiness ahead before there's recalibration?
I think that's what the bullish argument has to believe, because I think at the end of the day, this is about growth. It's been about growth since all of this began. Right? We started the year in a kind of standstill, having hit highs on major markets back in December of last year. We start this year in this kind of uneasy stall. Then mid-February, the data starts coming in saying all of this uncertainty around trade policy and fiscal policy more generally out of the US is creating a dampener effect on activity. Business confidence is down, consumer confidence is down, everybody's hoarding their money, nobody's spending, nobody's investing, everybody's backed up because the fog is so thick, nobody knows what's going on and doesn't want to lay out capital. The sell-off that followed was a recession sell-off. And then in April became something else. And as it became something else, it looks like we lost Chris here, but no doubt he's heard this shtick before.
He can't take it anymore, Ilya.
He can't take it anymore. He's just I can't do it.
Talk about it.
I can't even do it. So with all of that, April was scary and crazy and came back all the way, but the growth scare is still there. So I think for you to believe that we're going to go higher from here, you need more than just, the US is not having a sovereign crisis. Yes, we know. We've had a blistering rebound. I think now you have to believe essentially that you're in a place where the growth scare is over. And if you believe that, then yeah, oil is a buy. I don't think that there's any evidence to suggest that that's the case. In fact, we just got S&P Global PMI data that has put the world at a 17-month low on the pace of economic growth. 17-month low. Which, by the way, lines up very nicely with the 17-month low on U.S. growth, because the only game in town since the middle of last year was the U.S. China is not any less anemic. It's not any more anemic, in fairness, but it's not any less anemic, and neither is the euro area. Those economies have been basically just spinning their wheels for 6-9 months. But the U.S. had everything going and no longer does. That's sort of the upshot here. Okay, they get a deal done, whatever that means, in Switzerland. What could it mean? Could it mean that the tariffs go back down to something adjacent to 2%? No. Could it mean that it's going to go down, let's say, to 10% between the U.S. and China fast enough that the economic impact of what's already occurred isn't felt at all? Sounds like pie in the sky.
I mean, what would you need to see to become optimistic at this point, Ilya? Is it all growth for you? Is it all a U.S. economic? And is there some what's the simplest thing that would catch your attention and move you to more of the recession's not going to be that bad and growth is around the corner kind of vibes? And even, I know it's all hocus pocus, but even with the Fed governors talking in the days ahead or in the day ahead.
Because it's all hocus pocus, I am forever and always a follower of the price action. And so if the S&P is going to break, and if it's going to push through these levels that were there before, and there's Chris, before Liberation Day, and if oil breaks higher, if copper breaks higher, well, then the markets have told you. There's no need to guess at that point. The markets are telling you. But they haven't done that. And they're reluctant. And because they're reluctant, I'm reluctant right alongside them. I am but a mirror of the price action as it presents itself here, because I think you can get into a lot of trouble saying everything sucks now and forever, and until I see the evidence that it doesn't suck, I'm not long. That's how you miss stuff, because the markets front run things not sucking by months and quarters. I mean, obviously, the most extreme example was the rebound in stocks at the in the midst of all the COVID lockdowns, just as soon as the Fed said the magic words. The rebound in stocks in March of 2009, while the whole world was still in deep recession. So I think you have to follow the price action and keep your narrative loose. But the price action isn't there.
After hours, the market's a little bit off 56.86 right now. Sector performance today had a pretty decent sheen to it. Among the sectors that we cover here, 16 of the 25 were in the green. Led higher by the energy sectors, which noteworthy because those alongside the banks, Ilya, it does give a growth flair in a rather traditional way to the market. Dylan, I ran this exercise earlier with Jamal, so forgive me for doing this again for people who listened to Futures Power Hour earlier. But let's say right before the election, something happened and I decided to take a long nap. I ate the poison apple. I'm like Sleeping Beauty.
Sure.
And here today, I wake up, and the only chart that I look at is XLF. I would think, wow, the American banking system's holding up. Yeah, the economy's probably going through something. It's moving sideways, but 49.86, I mean, that's higher than where we were before Election Day and then some. Things must be okay. The economy's doing fine. Are the banks telling us that we're just overreacting to everything?
I mean, I don't know if the banks are telling us that or not. Obviously, we always overreact to everything. I mean, that's just sort of par for the course. I guess I'm going to take what I'll call an Ilya-ism, which is the market can be at the exact same price point, but for very different reasons. So just because the levels are similar to where the same price point or the same price levels can be communicating completely different ideas, I guess would be the distinction between, just because the level's here and the level's there and you slept and it's similar, doesn't mean that the reason that the level was where it was, 6 months ago or 9 months ago, and the level's where it is now, is anything remotely similar. And as a result, it doesn't mean that the expectations for the future are, that it's not discounting the same future, basically.
Oh, and by the way, look at XLF, and where is it? It's back where it has erased the Liberation Day gap. It's the pre-holy moly level. Well, okay, but where were we before the holy moly? A recession scare. Has anything changed about that? No.
No. High of 50.33 on April 2nd in XLF. The high today is 50.37 before we back down, so we can't quite clear that hurdle yet. The regional banks are looking a little bit better, of course, today as well. 56.85 on the close. The April 2nd high there is 57.28. We hit a high of 57.25 today. So not quite scaling through everything yet, but you can see how for so many of these charts, we're basically trying to cross the line in the sand. Semis are holding up a little bit better than everything else right now. They have made an advance through the April 2nd high. Technology, broadly speaking, has made that advance through the April 2nd high, although, here we are pinned near the pre-Liberation Day highs, and that's basically where we closed today. It's just going to take a little bit more. A little bit more here, and you can kind of clear the hurdle. And this seems to be just a game of confidence, right? And Dylan, if we get another trade deal, let's say Monday, China,
another one.
You get another one. You get another MOU. You get another term sheet from Japan, from South Korea, right? They bring DJ Khaled in there, Ilya. Another one, right? So
there we go.
I got the reference.
There we
go.
Come on over. The hip hop joke water is fine.
Dylan, I think that would actually be the most constructive thing, and you can kind of look past the economic data then, because you see that it's off-ramp into an off-ramp into an off-ramp into an off-ramp. The worst thing that happens is that you get no other deals next week, right? we got to get more deals in quickly, or at least term sheets of deals in quickly to keep spinning the wheel right now.
That's right.
India seems like it might not be a priority at this point in time, given what they have going on in Pakistan, or rather in Kashmir versus Pakistan. That probably takes a back seat. Dylan, can I throw a conspiracy at you? I think I should.
Please do. I love a good conspiracy.
Ooh.
Is China behind what happened in Kashmir a few weeks ago? I can't help but think of this timeline where we've seen over recent months that American companies have been talking about and taking steps to move manufacturing from China to India. We here in Overtime, just a week and a half ago or so, discussed a news report out how Apple was trying to move some equipment to India, and instead of facing the typical 4-day delay, delays began to stack up into several months, and none of the equipment has been able to be moved out of China into India. Over the past 2 weeks, we've heard China call Pakistan an all-weather ally. As the trade war is ramping up, there's this horrific terrorist attack, obviously, in Kashmir, and now you're engaged in a conflict between two nuclear-armed powers at a time when American companies are trying to figure out where they can re-domicile their manufacturing. India doesn't look like it's such a hot location all of a sudden. You probably want to wait to make any formal announcements.
I mean, I hope if the Chinese did that they covered it up nicely, because that would border on, that's some pretty nasty poker right there, my friend.
Haven't historically trade wars led to real wars?
They have.
All-weather ally, by the way.
Is a very strong term.
What a strange choice of words. What a strange choice of words. I mean, you sort of, when countries want to talk to each other, but they're not talking to each other, diplomacy often takes on this almost coded language where you're trying to tell the other side something without telling them. What an interesting choice of words.
I can't look past it all. I just think that, we talk about this being a chip on the field. If companies could just pick up and pack their bags and move out of China, then this wouldn't even be a conversation. Keep the tariff rates on. They move to Vietnam, Cambodia, India, Thailand, right, wherever. Cheaper labor, but not in China still. And now one of the big places that Apple over the years has been moving iPhone production to is probably taken off the map as a desirable location in the short term. So a piece of leverage is off the table for the US, right? Like our companies are just going to move elsewhere. Or they're just going to move to friendlier nations where they can, ally reshoring, friendshoring as we call it, right? We're just going to friendshore everything. We don't need to bring the factories back to America. The factories go back to countries that we have low tariff rates on that are our allies. Well, the biggest one that has the largest source of labor for electronic goods is now in a hot conflict with another nuclear-armed power. What do they say? Too coincidental.
Masterful. If it was done, it would be a master play.
I can't link the two. I mean, I don't find I also rewatched all the Mission Impossible movies recently, so there is one that takes place in the Indus River Valley. Mission Impossible Fallout, which is just a fantastic. Tom Cruise makes great movies. It's too bad he's such a.
He really makes a fine film. That man he's a talented individual. I think. I
gotta rewatch Top Gun 2 again. It was so good. That was a really good movie. Dylan, talk to me about Tesla. First buddy here, a little bit of a recovery yesterday, as we noted on the show, right up against that 1 month moving average. We talk about a potential trade up here in Tesla, where if this is a double or triple bottom, the measured move being about $85 or $90 wide, depending upon your measurement points, sees a potential trade closer to 380, 390 moving forward. Today's obviously a good day. Tesla's up 3.11%, quietly a leader here. Is a way to trade this market. If the market's going to go up, right, if we're wrong about stocks that were reached a near-term top, wouldn't a name like Tesla be one of the leaders in a continued bull market,
yes.
rally?
I mean, I think,
Probably.
If the market is going to go higher, which who knows right now, honestly, but if it's going to go higher, Tesla's going to be one of the. I would speculate that Tesla will be one of the key performers.
You'd think on a whole host of grounds, if only because. Sure, there is a rebound, and if there is a rebound and it's real, then it's probably linked to some kind of unclenching with the U.S. and China, which, of course, helps Tesla directly. But also, in that the stock has become something of an avatar for Elon's proximity to the administration, maybe you'd get a kind of sentiment improvement also, because if you walk off the trade war and the things are okay broadly, then a lot of the ill will maybe takes a graduated step lower, especially since a lot of the firings are being undone. And so with all of that, then maybe Tesla just gets a little bit of a maybe we don't hate this quite so bad now type of a response.
Well, the auto manufacturers today, all up across the board, except for Ford, which is off by 0.05%. You see here, Stellantis was up 4.61%, Tesla up 3.11%, GM up 4.11%, outperforming the broader market. And Tesla itself, this is the one thing that drives me crazy. You have Ron Vara, a guy who is a plagiarizer and a liar about his credentials, and Peter Navarro giving the president trade advice when Elon Musk is right there. And for all the complaints I've given about him, guy is one of the best domestic manufacturers in American history, right? He knows how to stand up a supply chain better than anyone else. And he's done it in a manner where basically it's all local sourced. So Tesla is one of the companies that has the least impact, the lowest impact, thanks to these tariffs. Why wouldn't you be using Elon Musk as a guy to advise you on how to rejigger onshore manufacturing? I digress. The fact that these companies are up mostly across the board today tells me there's more relief coming. And we saw the UK steel and aluminum tariffs zeroed out. Is there a path forward for Mexico, for Canada, perhaps? If there is, are these manufacturers underpriced at these levels? They're probably going to face difficulty if consumption's down, Ilya. That's obviously not a debt, right? But longer term holding, are they a going concern? Yeah, they're going to stay in business.
I mean, sure.
But if they're getting carve outs, then the market's probably underpricing them. And today's move across the board, it wasn't just a Tesla thing. It was all the manufacturers. They all had a nice little bump. I would point out technically GM, it had this false breakout in March. We stay in that downtrend as we've been meandering here, treating former resistance as support and trying to trade through former swing highs. So you can see across the board, again, GM looks like it's trying to bottom, like it's trying to climb out of its downtrend. Okay, closing back above the 1 month moving average for the first time since February 25th today. And Tesla's potentially on the precipice of a breakout. There might be something big in the works in terms of a trade deal. Maybe it's about US, Canada, Mexico. Maybe that's the next domino to fall, Dylan, and that's like the real confidence boost you need for the market to fully buy in that this is all just a game of 4D chess. As much as I hate to admit that, right? Because it contradicts my own point of view about how this has all worked out. But wouldn't that validate then the bulls for the next few hundred points?
For sure it would. I mean, I think that's kind of the bull. I think that's why the markets in mid-April came back from those lows. Was on the belief that wherever it's going to come from, whether it's a Mexico, Canada, U.S. deal, or whether it's a China, U.S. deal, or some combination, Europe, Japan, whatever, that one way or another, this is all going to end up in a bunch of deal making. That basically what was announced at the beginning of April is nothing more than a negotiating position that will never come to fruition.
Ilya, I think the plan for me tomorrow is I'm going to stay short NES. It's not changing. But after talking about it yesterday and today, I think it's going to be worth dipping our toes into something like 71 days out. in something like a Tesla or a GM or a Stellantis, the long 350, short 400, risking 1 to make potentially 7. That's a long time. If Tesla is going to break out here, it's the kind of stock that moves in leaps and bounds. And getting back to 350, that's nothing. We went from 350 down to 300 in the span of like 5 trading days. Tesla moves like a meme. So,
especially here.
Yeah, I think, I find myself very conflicted. I'm not going to shy away from that. Monday, great day. Literally not a single thing I had except for Eli Lilly and my long-term portfolio and on the tastylive account. Nothing was down. Today, everything except for one thing was down. So I got a
rough day.
Yeah, I got to say,
it's been a rough day.
The week is basic. I'm still up on the week. It's not as good as it was yesterday morning. But if I'm wrong and we're wrong still, we got to have something in our pocket that takes the edge off.
To me, that's the Russell, because while a lot of the stuff in ES and NQ is easy to argue with, the Russell is harder to argue with. I mean, take a look at the 4-hour or the 8-hour here. That looks like maybe it cracked. Now, the Russell is less liquid. It's not as well appointed. But if you look at sort of where you've ultimately landed on this, it does look like maybe, just maybe, and again, it looks different depending on what you want to look at. The break looks a lot more convincing on the continuous contract than it does on the June, but nevertheless, on the 4-hour chart, you have a break. You've taken out the previous high. So I think if you look at all of this, if you're gonna hedge somewhere, maybe what you have is a long Russell, short NASDAQ, long Russell, short ES kind of a vibe here, if you must hedge.
Interesting. Yeah, the Russell perking up today and leading is something that I don't think should be dismissed. They obviously are going to be a little bit more sensitive to cost increases, and the fact that there's a zeroing out of the steel and aluminum tariffs, that's something significant that we do trade with the UK about. We don't, they're not our biggest trading partner. They're in the top 10, but the metals is a big component of that relationship. So with that said, you find yourself with domestic manufacturers now having a little bit less pressure on them. They're not out of the woods. If this takes a step further, and again, more of these type of deals coming through. Dylan, you mentioned something earlier that I can't get out of my head either, though, as we wind down the show for today and the week. It's very rare that a president of the United States says that it's a good time to buy stocks, or you must buy stocks now. I think of Obama in 2009, 3 days after the market bottomed. I think of Trump in April. And I think of Trump now in May. Trump in April was obviously, he said it that morning, and then the NASDAQ was up 10% later that day. That obviously didn't play out the same way today, of course. But if you bought back when Donald Trump said buy stocks and you bought at the high of that day, you're still up. But you said that he meant to front run some of these things. And there might be some evidence that that's been occurring already in some of these markets. So how should people like Ilya and I reconcile that we have legitimate fundamental reasons to potentially be short still, knowing that he may be teasing something bigger around the corner, as he is wont to do as a TV showman in his heart?
I mean, I think you have to internalize that there's a 100% chance of a series of trade deals and be comfortable being short despite that. You can't be short hoping that there's not going to be some Trumpian TV trade deal.
Sure.
There's a 100% chance of that. You have to be comfortable that the levels right now already reflect the expectations of that trade deal. But what's not priced in is the recession that's going to be caused by the disruption and uncertainty in the flow of products and services while the deals were being, while trade deal theater was being produced.
That, by the way, might be the ultimate in the holy moly, as it still looms ahead, where the peak in this optimism is some kind of sign of a US-China off-ramp. The dust lands. Everybody looks around and goes, wait, where is everything? And where is Oh, yeah, there's a 5-fold tariff that's been hitting us going into mid-year, and that's going to keep on being with us for a while. In fact, the PMIs that S&P Global and Caixin released today for China was writing and saying, you see how there's people being fired in China? You see these job losses in China? That's because it'll be the second and third quarter data that really tells you what all of this has already cost. And that's Caixin talking. That's from a Chinese perspective. Not the governments, mind you, but private sector.
So talking of price increases already happening, this is my piece of anecdata. I like the Echo Spot. I have one here in my office. I have one in my kitchen. I have one in my bedroom. I have one in my gym. I like being able to talk and say, put on music. Set a timer for the laundry, right? Glorified alarm clock. The Echo Spot that I got
I'm too much of a Luddite to talk to Skynet.
Oh yeah, no, I put listening devices all around the house. So government, please listen in. I purchased it on October 1st, 2024. It cost $44.99. It is currently listed on Amazon.com for $64.99. Same exact model. So the price increases for things are going up. When it bites, it's going to eat into consumption, right? We only have so much money to throw around. So I will not be buying a new Echo Spot for the bathroom. I'm kidding. I wasn't going to do that. Don't need to listen in there. But we do see that ultimately just doing a spot check of going through goods of toothbrushes that I've purchased in the past. Those have gone up about 70% on Amazon. Everything across the board. So do due diligence yourself, right? Look to the things that you commonly buy in the store and see if they've gone up in price. And maybe like, oh, it's only 50 cents. But yeah, 50 cents on a $2 good. Well, that's a 25% price increase. And with enough goods, that's problematic. So I hope... Tell you
what, tickets to the Outside Lands Festival here in San Francisco have gone up astronomically. I'm not sure that the trade war is at fault, but it might be emptier lawns this year.
I hope I'm wrong, Ilya. I hope we are wrong. I do. I hope we're wrong. I hope we lose money on our shorts because ultimately it means we're out of the woods economically and we're not staring down a self-made crisis. And that's legitimately. I'd rather be wrong.
No, I'll gladly switch to making money on the long side, being long dollars and long U.S. stocks. La-di-da, let's go. That would be great. I just don't see it.
With that, overtime is out of time for today and this week. We'll be back on Monday, same time, same place, 4 p.m. Eastern, right after last call. So for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. We'll see everyone soon. Hope you have a good weekend. But we're not done here on Tasty Live, of course. Ilya and I will be back tomorrow for Futures Power Hour, but he's coming up next with Macro Money. See you soon.
See you there. We have a trade deal, everybody. I guess. That's the news that's elevating the markets today. But the real question is, can we get something done on this trade war that really sticks and really matters for avoiding global recession? That's exactly what we are going to tackle here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we're going to take a look here at what is probably the biggest real event risk for the markets, the evolving relationship on the trade front between the U.S. and China, and take a look at some of the economic data that's informing the state of play here, as well as where we're going next. But first, let's take a look at the price action, because it is certainly of a more chipper variety here today. But again, very interestingly soggy into the end. So obviously we've had a blistering rally here for the S&P 500 as a kind of bellwether for overall risk taking from the panic lows in April, what I've come to call the holy moly. This is the Liberation Day gap right here, and this is where the markets go, oh no, is this a sovereign or a currency crisis in the United States? And then as this volatility shakes out, the answer quite reasonably, I think, ends up being no, it's not, because even if the U.S. were to unilaterally withdraw itself from the global trading order that it has itself engineered, and which has the dollar and the U.S. Treasury bond at its center, there'd still be no viable near-term replacement for the dollar or the Treasury bond as the most liquid, most viable unit of commercial exchange and the most viable benchmark for riskless interest income that is available. And so with that, you still have the global architecture as it stands, and so the markets unclench and we get back to this starting line. We get a little bit of a pop yesterday in the wake of the Fed policy announcement, despite some initial unease with the lack of urgency at the central bank. But then really the news today is what gives us a slightly higher high here. If we go back and actually poke at the high that was there before Liberation Day going into the month of April. Interestingly, we don't stick the landing. We don't actually manage to get over it, and we ultimately recoil back into the range for price action that has emerged since the beginning of the week. We failed to clear Friday's high. We failed to make headway through this resistance that lasts, and that we actually got all the way up there only to come back in, that can be a sign of technical exhaustion. We'll, of course, wait and see. But really, the question here of motivation is very juicy indeed, because what catalyzed this today seemed to be the announcement of a trade deal between the U.S. and the U.K. Now, obviously, this is not exactly the same thing as many of these negotiations, because, of course, it is the UK. It is one of our closest allies from the womb, as it were. Moreover, it is a country with whom we ran a trade surplus last year. Finally, the tariff of 10%, the benchmark tariff of 10% established by Liberation Day, which was itself a five-fold increase on the 2% average tariff that was there before then, that stands as a consequence of this quote-unquote deal. And I say quote-unquote because nothing here appears finalized. The UK is at pains to talk about ongoing negotiation as all of this is occurring, despite the triumphalism from the White House, because, of course, they don't like that there is a 10% tariff, even though there was a little bit of a carve-out to lower auto tariffs from 25% down to that baseline of 10. It is still a lot higher than where we were before the calendar turned to 2025. And this is the 9th largest U.S. trading partner. It isn't the first. And so if what we're looking at here is optimism about the idea that deal making can happen and tariffs can come down, conceptually, the real test of that concept would be some progress with China, where, according to Treasury Secretary Scott Bessent himself, there is now an effective embargo on what is the world's most significant leg of the supply chain, the linkage between the world's number 1 and number 2 economies. So it'll be very, very interesting indeed to see if any of this holds up, as Bessent heads to Switzerland to meet a senior Chinese trade delegation, ostensibly to kick off talks. And of course, before then, the posturing is loud and heavy. Asked whether he'd lower the tariffs from 145%, the president flatly said no, that he would not do that as an inducement for talks to proceed smoothly, that would be part of the talks themselves, although he did signal that the tariffs won't go above 145 and that they have a natural direction to come down from here, but said he would only do that as part of the negotiation. And of course, the message from China, the spokesman from the finance ministry there saying, if the U.S. wants to talk, it needs to stop exerting pressure. That is to say, we can talk about a trade deal, but you need to lower these tariffs first. So neither side wants to blink here, seemingly, as we head into these talks. And China has loudly said, well, the U.S. wanted this meeting. We still firmly oppose what they're doing, as if to say, we're not going to look like we scrambled to the negotiating table here. They are. And the U.S. is saying nobody is scrambling anywhere. And so both sides seem to want this off-ramp, but neither side seems willing to take a step back from the breach. And so it is with this in mind that we're going to get some very interesting economic data coming out of China to set the stage, because while there is a stalemate, it is a waiting game and beckons us to take a look at who is going to blink first, or at least where the economic damage might strike hardest. So incoming data out of China expected to show that export growth slowed sharply in April from 12.4% in March to just 1.9%. Imports, meanwhile, continued to flounder yet again, a negative number expected, down 5.9% year on year. None of this, of course, speaks to anything but weakness, and more importantly, that melt up in imports that you saw in U.S. first quarter GDP numbers. That, of course, looked like the front running of tariffs, as did the massive build in inventories. But China's key role in supplying that front running was, of course, firmly on display here. Going into the beginning of the year, we had a surge in exports, and indeed, even coming into the election last year, some pep there, but that has clearly started to unravel as front-running tariffs that have, of course, now already occurred has basically run out of runway. Meanwhile, domestic demand has been getting more and more anemic since the end of 2023, where it peaked, and that continues to be the case. As if to highlight that point, we have inflation numbers coming out of China expected to show another month of negative inflation, 0.1% year on year expected. That, of course, speaks to the absence of price pressure as catalyzed by demand for consumers. And then on wholesale prices, it's been all negative numbers for a long time, going back to the middle of 2022, and it's not getting very much better there. Again, speaking to how much throughput there is through the still most significant node of value add production in the global supply chain, how weak demand is for wholesale output, and so how weak the global trading environment actually is, and how much China is able to capitalize on it, which is obviously not very much. This continues to be a story of weak demand, both for consumers and for firms that supply both them and the external market. Now, earlier this week, we had the S&P Global and Caixin private sector estimates of Chinese PMI data. These are purchasing manager indexes. Of course, as ever, 50 is neutral, above 50 is growth, below 50 is contraction. The faster the further you go above 50, I should say, the faster the growth. The further you go below 50, the faster the contraction. Take a look here at the composite index, and you find a 3-month low on economic activity growth that's just hugging this 50 line. So we've slowed to near standstill, and current activity is the slowest it has been since January, telling you that indeed there was a ramping up in February and March, and then in April it seems to all have come undone. You can see that here in the breakdown between services and manufacturing, and you can see that manufacturing in particular has taken a dip here, ostensibly as this front running of tariffs ran out of juice. Interestingly, the 3-month low on growth, that matches up with what we got from official sources. China, like the US, has 2 versions of these PMIs. One of them is from the China Federation for Logistics and Purchasing, which alongside the National Bureau of Statistics makes the government's version of PMI. And here, what you find is indeed standstill. The composite is at 50.2. Services has slowed, but it's really the story in manufacturing, which is, again, contracting, and contracting at some of the slowest rates we've seen in this entire sequence. We're basically at the bottom of the range for manufacturing performance going back to early 2023, which, of course, reiterates what we've been saying about China for quite a while. For 8 consecutive quarters now, China has had economy-wide deflation. That is to say, real GDP has run faster than nominal GDP, implying that the inflation adjustment between them is negative. That, of course, means that basically the whole economy is on discount. If prices are falling, then there is no demand to beckon them higher. And so the world's second largest economy is basically on life support here. It's treading water. It's not really going anywhere. Moreover, the deflationary gap is actually getting more severe over the past 3 quarters. So we're in a situation where China's economy still looks to be in very bad shape. But then on the flip side, of course, we got numbers out of the US that don't paint too much of a better story. S&P Global PMIs give us a composite at 50.6, near standstill. If we look at what this compares like with the other set of PMIs out of the US, which also does too, that this one is from the Institute of Supply Management, there's a little bit of a difference in the components. So here the manufacturing is obviously weaker than it is here. It's 48 there, it's 50.2 here. Services is a little bit weaker here, 50.8 versus 51.6. But the upshot is basically the same. Both of them give us a composite level that is just above 50. And we don't have one calculated here because that's not the way ISM does it, but it's not easy, or it's not difficult, rather, to surmise. Manufacturing is a smaller component of the average here than is services. And so if you average these two, but you tilt it in favor of strength because services is a bigger deal, well, then you end up somewhere just above 50, give or take. So whatever the specifics internally, the bottom line is since the beginning of this year, we've moved off some of the strongest growth we've seen in 3 years or so. You can see that across the board here, down to what is essentially standstill. And of course, when you compare that across the US PMIs, both versions of the ones from China and, for good measure, that of the Eurozone, you have convergence on standstill across all 3 of the major economies powering global growth. Whereas from the middle of last year, Europe and China were weakening into basically an idle state, but the U.S. was powering on at some of the strongest growth we'd seen, especially toward the end of the year, since all the way back in early 2022. Now, across the board here, we've ground down to basically standstill. And of course, we look at these three economies because together they comprise 58% of global GDP just by themselves. Never mind their knock-on effects on the remaining 42%, which are for the most part vendors that depend on demand from China, the Eurozone, and the US in order to have GDP contributions of their own. So if this is the story for the engines of global economic growth, that is convergence on idleness, well then it's hardly surprising that when you get the S&P Global's worldwide measure, the global PMI number that they put out alongside JP Morgan, you end up with a 17-month low on economic growth. And here's that pop in manufacturing around the front running of the tariffs. You can see it here. But that's hardly the bigger story because, again, that's a smaller piece that is services, and we can clearly see here, services has been steadily slowing, especially since the beginning of the year, and is now at the weakest levels we'd seen since the latter part of 2023. Take a look at the breakdown of the components. None of it is especially encouraging. Output growth, much slower. New business growth, much slower. New export growth has gone from growth to contraction. Future output, that is a measure of sentiment, sharply lower. Employment from growth to standstill. Outstanding business was shrinking, is now shrinking at a slightly faster rate. Input price inflation weakening a little bit, ostensibly because of demand destruction, but output prices actually accelerating, as if to flag that stagflationary risk that has come out of both the U.S. Activity surveys, the ISM and the S&P Global, as well as the Fed itself, when Jay Powell spoke this week following the FOMC monetary policy announcement. Why do we care about this? Well, clearly we can see that this composite PMI globally has been a pretty good approximation of where global GDP is heading. And the trajectory here seems to be that the path of least resistance is still down. Come all the way back to where we are on markets and consider that if the path still is toward recession, if the US and China have converged on standstill where Europe was waiting for them and the global economy has not started to improve yet, then there is a long tail to any negotiation to really put this recession monster back into the box. And so it becomes very difficult to envision how you don't get a global recession in this environment. Now, maybe there's a China deal this weekend, or at least a very cordial meeting with a clear sign of an off-ramp, but the damage has been done. And it will take months in terms of recovery to even begin to see that there is a dip, and then to envision that after that dip, there will be a rebound. And maybe that's enough for sentiment if a deal is done. But as this posturing continues, the economic weakness that is the foundation, while the posturing goes on, suggests that the recession is very close at hand. And the question now is, can it be managed to something mild? And something that sentiment need not be worried about. And if not, well, then it's what we were worried about on the way to exactly where we are now. And although the proverbial holy moly may be over, this part of the story is still very much in play. That's Macro Money for today. We're here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. That makes this the last show of this week. Macro Money will be back Monday next week. I'll be on with Chris for Futures Power Hour tomorrow and on Mondays, as I am every week. I'm on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Thanks for watching. Macro Money's back next week. Happy trading.
What is going on, everybody, and welcome back to Risk and Reward with Gus and Errol. Really volatile day in the market. I know there was a lot of anticipation with Trump, a lot of conversations. We'll get into all of that. Going to be talking about student loans today, so I'm excited for this topic of the day with my brother Gus. How we doing today? We'll get into it here in a moment.
Yeah, doing good. It should be a fun one. I agree. I got a haircut scheduled uncomfortably close to this stream, so I'm gonna be booking it out of the studio once we get off here. We'll see if I'm able to make that turnaround or not. I don't know, but other than that,
what kind of haircut? Like length?
Just length. I just need to get it cleaned up. I try to keep it like just above my eye, so I'm well past that level. But
well, now we know. So whenever it gets to that level, everyone, myself including chat, we're gonna let you know it's time.
It's true, and I'm like, I don't know, it's overdue. I'm probably like 2 weeks past when I was supposed to go back. I try to do like every 6 weeks, every 8 weeks, something like that. So yeah, reining it back in. But yeah, good day as a whole. Nice bullish day in the market. Kind of spearheaded by some positive comments from Trump surrounding the UK trade deal this morning, and then everything else to that end. But yeah, portfolio is mostly long delta with a lot of shares. So when the market goes up, I look like the greatest trader alive, and today is one of those days.
I hear you. I have such an extreme short bias, like we've talked about over the last couple. You can just tell I lean short, and I'm glad the other day we ended up throwing on that long Apple and that long, what was it? Was it Meta? Another underline we had thrown. So we got more long delta on, even though I wasn't feeling like getting long, but it definitely saved me in case something like today happened. You know, today happened, and those positions were able to hedge the existing positions that I had on since I was leaning such short negative delta. But that's how it's going for me on my end. If we have enough time, we'll get into the platform, chop up a little bit more of these trades. Anything new, though? Anything new you've been eyeing? Anything new you threw on that we need to know about?
Yes. Yes is the short answer. I picked up Match.com this morning. Very similar sentiment to what I was talking about this past Tuesday. I posted it in the follow page, but the idea is just that they just had a very strong earnings call with very strong numbers and what seems to be bullish forward guidance to me. And they dropped almost 7% this morning. It's sort of a sentiment dip. Bumble fell off, and so people believe that Match is following that. But Match.com is Tinder, Hinge, and then they have like 2 other sites as well. But I really liked the way that the earnings call went. They said that they're doing all sorts of different things to try to address their the slowdown in their users. They found that holistically society was growing a little bit tired of dating apps, and so they're trying to find ways to shake it up, something that I saw that I didn't know existed. I'm not on these dating apps, but on Tinder apparently now they have a double date function where you can like group up with a friend, like a buddy, and then find 2 other friends that also want to go on a date. And they said that they've seen success with that. Numbers are steadily climbing back up. They beat revenue, they beat EPS, fundamentals look sound, and I say it all the time, America is getting lonelier. So I'm bullish there, but I added some shares in the dip, and then I also picked up some pretty serious leaps. September 19th with 20 is my critical strike there on some verticals. So feeling good about that one. That's a spot.
That's a really interesting feature function that they added. At first, right off of hearing that at face value, I was like, "What? That's weird." But then when I think about it again, that would make a lot of sense. Number one, breaking the ice, meeting strangers, and also, if you're anybody for that matter, but especially if you're a lady and you don't want to go meet somebody randomly, you want more of a group setting, I can see why that might be beneficial. Super different. It reminded me of the Uber share ride where you can share rights. So that's what that feature reminded me of, but really interesting to see how that landscape's adapting.
I have questions about it. I would actually like to know a lot more, because how does it work? How does the initial messaging phase work? Who's talking to who? Are you guys independently deciding which of the other pair you want to go out with? I don't know. I have more questions on that front. But holistically, I think it's a cool idea. And then the other thing that they're implementing, which I think sounds, dystopian and kind of a little strange, is they have like a AI voice agent that you can practice flirting with. It's called Game. Which is very odd to me. I suppose I wouldn't fault anybody if you need some reps. Apparently it is pretty well done. But seems a little strange. I don't know if I would sit in my bedroom flirting with an AI for practice. That's
no. This kind of ties into the conversation that we had a day or two ago, where we were talking about there's a difference between communication and socializing, and it's looking like there's being some efforts for that socializing. So AI is playing a role in terms of sharpening your social skills. So what can AI not do? Impressive nonetheless. We'll see how those things pan out. But dating apps, extremely popular. Not on one. I would get in a lot of trouble if I was on one, but no. I love it. We'll go ahead and jump into these slides here as we chop it up a little bit. I know, the topic of the day is going to be student loans are back. Student loans are back. What do we think about this so far, Gus? I know we had a little bit more conversations about the resumption of a lot of these things and the potential consequences as we're about to get into it. But when we talk about this topic, what first comes to mind? What do you think? What do you feel about this?
Yeah, student loans. It's been a long saga. Began in 2020 with all of the other COVID craziness. Payments technically resumed in 2023. Then they kind of technically resumed in 2024, and now they're really resuming in 2025. Complex, nuanced thing. We have a very wordy first slide to set up the timeline on all this, so we're all clear-headed in. But I don't know. I think it's interesting. I feel for those who have defaulted on their loans, or who are now going to have an additional expense added to their monthly or weekly expenses, however they may choose to amortize it. But at the same time, I kind of see the other side of the coin, where I'm like, man, if you haven't made a payment in 5 years, maybe this is on you a little bit. So it's an interesting topic with a lot of nuance, some implications on the broader economy, and we're excited to get into it.
Absolutely. So President Trump has ended the suspension of student loan payments. Here's what it means for the economy.
Yep. So first of all, let's set up this timeline. Initial pause on student loan payments in general began in March of 2020 with the CARES Act, which was passed by President Trump at the time. So that effectively lasted for 3 years until September of 2023, and there was an extension by the Biden admin in the middle there. But until September 2023, when loans began accruing interest again, but payments were still not due until really September of 2024. They started accruing interest September 1, 23. October of 2023, you were supposed to resume payments. But until the end of September 2024, they had this 12-month on-ramp period, which is specified here. Borrowers were shielded from certain penalties. It couldn't hurt your credit, and you couldn't default, was the situation. So basically, you didn't have to freaking pay until September 2024. April 30th of this year, 2025, marks 6 months since that on-ramp period ended. And then the Department of Education is officially resuming involuntary collections on those who have defaulted as of May 5th, which is 3 days ago at the time of this recording. So that means that the Department of Education can now take wages from people. They can get into your tax refund. They can get into your Social Security benefits. Department of Education is going to do whatever they can to start actually collecting on these payments once again. And we have 5.3 million borrowers who are currently in default, meaning that that would be you've defaulted. They defaulted sometime in that on-ramp period or sometime into 2025, but you couldn't default in that on-ramp period, so you didn't technically default until April 30. It's a very nuanced timeline. But the point is, pause began in March 2020, and we are officially, actually, for real, resuming student loan repayments right now, and the Department of Education has the authority to garnish wages, taxes, Social Security to make it happen.
No, absolutely. I think, like we talked about with inflation, interest rates, all those topics that are very prevalent right now, just like tariffs. I think whenever these things come about, you become extremely educated on these topics. And I think, now that this is going to be a very common topic because it's being resumed, I think a lot of people are also going to be getting educated, like myself. Like, again, there's just very small, starting, pausing. What does that mean? So I know there's little intricacies that I picked up on and have an even deeper understanding on, just because this topic is very common right now, and we're talking about it, we're researching about it. So this is going to have huge implications. So I'm excited to see how those are going to pan out. We got Donald Trump and Joe Biden right here. What do we got on this one?
Yeah, smiling Trump and Biden here. So yeah, as I said, Trump initiated the pause in March of 2020. Congress extended it, and then Biden extended it slightly further, but it eventually became too much of this giant outstanding bubble of loan debt. There was budget issues, legal pressure and also some lobbying from the people who stand to gain from these loans being repaid. And SCOTUS, the Supreme Court, struck down President Biden's notion to fully forgive student loans in 2023. So essentially, with all of the nuance that we just outlined in the first slide, we are still basically just on the end of the original framework that was set up with the CARES Act in the first place, with some slight modifications. But this is the timeline. This is how things were supposed to go. And once again, I kind of circle back to my original point of, not only did you know this was coming, you had 2 or 3 extra years on what the original timeline was. So yeah, this is not a surprise. Is really the point here?
Yeah. Chad says, thanks, Donald Biden. There we go. No, 100%. There's a little bit more context on these student loan repayments, but let's talk about some groups that'll be affected. Recent graduates, obviously, 2019 to 2023, especially. Many of these borrowers entered repayment during the pause and haven't had to make a regular payment yet, making the adjustment financially jarring. That's kind of what you just mentioned. It's been 5 years. Have you not made a payment? So it's been some time, and I would argue maybe some negligence to some, and then also some people probably forgot. Like even just the topic of student loans, it's like, oh, I totally forgot that was a thing. We heard about the pauses, we heard about this, that, and the other. Then we're getting hit with inflation, CPI. Then it's like, oh yeah, student loans again. Low income borrowers as well, those earning under 50,000 annually will definitely feel the pinch, especially with inflation still affecting essentials like rent, groceries, and then again, borrowers with no degree. This kind of all of these bullet points really come down to the same bottom line. And about budgets are going to start to get squeezed here a little bit, but borrowers, with no degree, many took out debt, didn't complete a degree, limiting their income and potential while still owing loans. I would say that, and then also, I know we're going to start seeing a lot more shifts in our economic environment. I think this is a really interesting topic. I don't want to go too off course here, but getting degrees that might not be in the job market by the time that you graduate, or even maybe 2 or 3 years after you graduate, because whenever you're finding a job, you're not looking to have a job for 2 or 3 years. You need some long-term stability. So I think, with the rapid development of the technology that we're going through right now, it's going to be interesting. Like, I don't want anybody to be in a difficult position, but it's going to be interesting to see how, with all these new tools, AI softwares, what, areas and occupations are going to be in less demand, and you might be going to a degree. You might be in your 2nd or 3rd year, recognizing that, this occupation isn't even in demand anymore because of the development of technology. So a little off course there, but just going to be interesting to see how these things pan out. But obviously borrowers with no degree, 1st generation college students, might be, family situations. Everybody's situation is different. Often lacking family financial support, navigating repayment with limited financial literacy or guidance. And again, we're adults. We can't take out these loans without being 18 anyways. But I think it's still important to at least acknowledge, everybody does come from a different situation. Some people are paying for their college while they're in college. And some have the support of parents that some might not, right? This isn't an excuse for anybody to default on it. We're all responsible. We're all adults. But I think during this time, it's going to be important to at least acknowledge that at least. But right.
I agree. I think that's a very valuable thing, a very important thing to acknowledge in the grand scope of all this. And also, while you are technically an adult, once you're 18, you're still very much a kid. Your brain is quite literally still developing. And I will note that, while I'm kind of, I'm not making light of the situation, but while I'm saying like, how could you default after 5 years? I also understand that it is kind of predatory the way that student loans work in the first place. Colleges will give you bad guidance, will encourage encourage you to get a bad degree that is not going to pay well and to take out $100,000 in loans to do it. And that's what's always been the craziest part about student loans to me, is that if you wanted to get approved for the same amount that you get in student loans, but for a house when you're 18, they would say, hell no, you have no income. We're never going to give you this money. But then for some reason, when it comes to student loans, you're suddenly just instantly cleared to take on 6 figures of debt in many cases. And it is, I mean, I don't know about predatory, maybe that might be too strong of a word, but there's issues with this system. I don't mean to make light of it.
Absolutely. No, absolutely. And I mean, I think that's a pretty accurate word. I think we could call it how it is. Again, we are all responsible for the choices and decisions that we make. But just as a nicotine company, they are predatory. It's your decision to go out and buy nicotine, do these kinds. It's your decision. But there is a beneficiary, whenever offering that bait. It's kind of like bait sometimes. But at the same time, we are absolutely responsible for our decisions, and we have to reap the consequences, whether that's positive or negative. I mean, our parents teach us that growing up.
Well, and there's big issues too, I think, with colleges and advisors in college really giving kids bad advice, like about as far as what majors and things that they should do. A specific example that I could throw back to the 1990s for is my own dad came into college, didn't exactly know what he wanted to do, and he decided that he wanted to do geology. He thought geology would be really cool. And his advisor talked him into English, and that's a decision that he has regretted for some time, because geology, you can go oil field, there's all sorts of high-paying jobs. I mean, that's a STEM major compared to English, and he found that the job opportunities just weren't there when he got out of college, and eventually he had to circle back in his late 30s or early 40s and get his MBA. And so you get into situations like that where not only are you allowing kids to take out a crippling amount of debt that will follow them for the rest of their entire life, but then also on the other side, the advisors are often advising low-paying majors that aren't ever going to be able to pay off the debt. So it's a very bad system that's broken on a lot of fronts.
Yeah, 100%. And I just like to reinforce the fact that we're all responsible for our own decisions, but at the same time, I like the word predatory that you brought up, and I do think it's accurate, even though it's such a strong, aggressive word, especially with the connotation behind predatory. But especially it being one of the loans that you can't default on, that you can't declare bankruptcy on, that you can't do X, Y, and Z on. And it sounds strategic, right? It sounds like these things were put in place on purpose, and there might be a beneficiary. But at the end of the day, we are responsible for the things that we sign. We're responsible for the decisions that we make. We have to reap the consequences. And like we just heard in chat, it's just how you went through life. So some broader economic implications: reduce consumer spending. I think this is also a strategic move as well. I think that reduced consumer spending is a little bit calculated, but borrowers diverting hundreds per month of loans means less spending on retail, dining, travel, and discretionary goods. Maybe we might even see even more of a slowdown in inflation because of things like this. We also have housing market pressure. First-time homebuyers might delay purchases due to tighter budgets, higher debt-to-income ratios impacting demand in the housing market. Right, this is going to be a tough situation if we get that time window that a lot of young people were looking for to take advantage of the overpriced housing market. And this is going to kind of shrink that pool a little bit. I was looking to take advantage of that because, again, this capital is going to be needing to go to different areas and whatnot. Credit card delinquencies may rise, right? Many borrowers leaned on credit cards during the pause, which is crazy. During the pause started a while ago, and I know we were just talking about Coachella. About 60% of those tickets were purchased using a buy now, pay later service, right? And then at the same time, right, consumer debt is almost at an all-time high at the same time. So it's almost like we could kind of see these things brewing about 4 years ago. Now we're coming to a little bit more of a consensus, but we could definitely see those brewing over the years.
Yeah, absolutely. And I think these are all great points, and especially the housing market pressure. First-time home buyers is already a market that is dwindling. There's no shortage of complaints about that circling on social media, and for good reason. Housing prices have vastly outpaced wages in the United States over the last 20, 30 years. But you're talking about now shrinking that pool even a little bit further of what was already small. So it is an interesting spot, to say the least.
Absolutely. As we jump to this next slide here, someone said some parents should be parents. Yeah. I know for myself, I don't know about you, Gus, but I know, many areas that I need a lot of improvement on, because I also know, whenever you're bringing a child into this world, number one, you need to be able to guide them, direct them, and teach them. And I think the experiences that we go through in life, is just equipping us for the tools to be able to do that and actually guide another human being. So I think some people are also, just again, born into different situations. And it's not the fact that, I know we're getting some comments too, it's not the fact that people don't care about poor people. I think it's more so, I think a lot of the time what it is we struggle with certain things in our life, whether we're in our 30s, 40s, 50s, 60s. So we also see, I struggled, other people, so we all feel it. We're all kind of in this together. We all have moments where things are tougher than other times. But just back to the parent comment, it is important. A lot of these things, a lot of these issues do start from having good parenting, and at the same time, in a lot of cases, not really, because I know there's a saying too, and again, not to get off track, it is all about perspective, because there's that one saying, right? There was a dad, there was two sons. There was a drunken dad, two sons. One became very successful. The other one became a drunkard, just like his dad. They both were asked why they were in the position that they were in today. And one said, because of my dad. The rich guy said, because of my dad. And the poor one said, I'm like this because of my dad. So at the end of the day, we do get to choose our choices and choose a perspective that we want to take. But as we get into this last slide here, what to watch next? What does all this mean? Does this mean the market's going to boom? Is the market going to crash? What does all this mean? What can we even expect? Delinquencies, default rates. I know we're kind of talking on the same touching points, just from a different angle, but early data on missed payments show how borrowers are coping and could trigger changes in service policies or some political pressure. Spending behavior shifts, like we just kind of talked about, consumer spending going to be going down a little bit. And I think that ties into spending behavior shifts. Watch earnings reports from consumer facing companies like Target, Walmart, especially Starbucks. Watch out for Starbucks. And then an impact on inflation. Less consumer spending may help ease inflation slightly, especially in services and retail sectors. Great topic, very educational. So we'll see what pans out of this. Any other thoughts on these last couple of slides here, guys?
Yeah, I think it's a very interesting and changing labor market. And I also think that it's very interesting that the labor market is in some ways shifting back towards college degrees not being as essential anymore. Still an incredibly valuable thing, and we're still a long ways away. But with how much easier it is to be a self-starter in the age of the internet and the age of social media, there are lots and lots of avenues that you can take to be successful with no college degree, or there is no shame in trades. I'm always saying this. I'm from Texas. There's no shortage of blue-collar boys down there. And I'll tell you what, there's people that went to trade school right after high school and have been making close to six figures a year for all 4 years while I was in college. The entire time they're making that money and they're doing really well. You can circle back and go to college later if those things start to weigh on you. So I think that it's really become this cultural thing where we feel that you have to force every kid to go to college, and it's absolutely essential, or you will be a deadbeat. And it's just not really the case. If you don't know what you want to do, don't take out $100,000 in loans to major in something that's not going to make you any money. You can take your time and find your passions and decide the real right angle that you want to take. So, it's just. It's interesting, big nuanced thing. But as you said, at the end of the day, everybody, and as I saw in chat as well, everybody has to be the CEO of their own life. If you make mistakes, and you got to just roll with the punches. It's not how hard you get hit. It's how hard you can get hit and whatever.
Moving forward. I got you.
It's not how hard you get hit. It's how hard you can get hit and get back up and keep fighting. That's what I'm looking for there. Jeez, I really lost my train of thought in the middle of that one.
No. All good. But this weekend is Mother's Day. If you guys have a mother and you're able to call them, don't forget, order some flowers from now if you need to, or whoever might have been that mother figure in your life. So let's remember that this weekend. And anything else to add before we hop on out of here today? I love talking about topics where you can actually give or that have some meaning behind, or very educational, and also just getting different viewpoints. I love talking about these things. So. Yeah. Anything else, guys?
No, it is always enjoyable, and there's lots of conflicting viewpoints going on in the chat here, and I think that's the beauty of talking about these things. I agree.
100%.
Yeah, I think that the discourse is the most important part here, and it's really important to get and see all these different perspectives. It's going to be interesting to see, and I also this impact on inflation. I think that's a very good point. Is that maybe. In the grand scheme of things here, this actually could knock down inflation a little bit. So that's an interesting touch point there.
Yeah. Well, lastly, I was listening to an audiobook. I can't remember who said it, but there was a great point. I was like, wow, that is really wise. I want to implement that. There was the quote said, I don't like to have an opinion on something if I don't understand the other party's argument better than they do. And I was like, wow, that was some wisdom for even me to hear, to really start diving into other people's opinions and understanding why they have that. I might not agree with it, but let me see where they're coming from and why they feel so strongly about this. Might not change my mind or my opinion, but let me see where you're coming from.
Well, yeah, and I think a very powerful mindset and something that actually has fundamentally changed my life is that it is okay. It's totally okay to say I'm not educated enough to have an opinion. And in the age of the internet, it feels like you're not allowed to do that, and it feels like you have to be an expert on every topic and argue with all these people on all these things. Everybody has a voice, and that's a good thing and a bad thing, as we've discussed in previous shows. But yeah, I think that add that to your vernacular. It would be a piece of advice I would give to anybody. I'm not educated enough to have an opinion. I use it regularly because there's so many things going on all the time that so many people have opinions on, and often I don't really know enough to speak on it. And so yeah, I think that's a prevailing issue. Also, I'll float something else totally random here. This is going to really derail things, but I saw somebody mention 1-800-Flowers. Do you know about the Katy Perry Act in California? This is something that I just recently learned about.
Enlighten me.
Yeah. So Katy Perry has 2 instances where she has sued super duper elderly homeowners, like owners of mansions, and then just like drug them through the mud and created all these court costs. There was one from 2015 to 2019 where she was actually trying to buy a convent, a former convent full of nuns. And there were 2 nuns who were very outspokenly against selling to Katy Perry. And one of the nuns actually died in court, like from stress, because she was in her 80s. And then after that, she tried to buy, and this is the tie-in, she tried to buy the mansion that the CEO or the founder of 1-800-Flowers owned. He was 82 at the time. And then after he had signed, he said he wasn't of sound mind because he was on a bunch of medication and tried to pull back on it. And her and Orlando Bloom drug him all the way through the mud until they finally got the house. And then they sued him for another $6 million in damages because he tried to go back on it. So anyway, yeah, there's now this law in California called the Perry Act, which is like Perry is capitalized. It's a whole acronym. But yeah, there's a fun fact for you all. Katy Perry is out here suing elderly people for their houses, and it's working.
Thank you for that. I need to learn something new every day, and I definitely want to have learned that on my own. You're putting it out there. That's crazy.
Yeah, I saw an Instagram post the other day and had to back check that. Yeah. But yeah, no, that is all factual shit that actually happened. So yeah.
Wow, that's insane.
Don't give Katy Perry the streams, guys.
Don't do it. Don't do it. Also, if anybody watched the Nuggets game yesterday, no, you didn't, and we'll leave it at that. That's gonna wrap it up, guys. Thanks for taking the time to chop it up with us a little bit today on some of these topics. Of course, we'll be back. We'll have an update on a lot of the positions that we put in. We'll be back with another risk of the week, adjust those positions, give a breakdown on them. But that's going to do it for today's stream. Be sure to stay tuned for more coming on next. We'll catch you guys next time. Peace.
Oh, yeah. It is Thursday, May 8th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's Evening Show, a little podcast